What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy. As always, the Mondays tend to be pretty busy with a decent bit of news coming out. There was a little bit of sprinkling of stuff over the weekend as well. I think the biggest story that really caught my eye today, at least the most game-changing one, will be Take-Two acquiring Zynga. So those are both video game companies. Take-Two makes games like GTA. They own brands like Rockstar and other things like that. And Zynga makes popular games like Candy Crush and kind of other areas like that. So Take-Two agreed to acquire Zynga for about $9.86 per share. And that gives it a valuation right around $12.7 billion. I know Zynga was up a lot this morning. It's up about 49.5%. So, but what I am looking at right now, Zynga's trading right around $8.97, $8.98, $9, and the buy price that is rumored here is $9.86. So there is still a little bit of premium there that's possible. Obviously, the risk of the deal falling through and not happening looks like your downside is about 90 cents, but the upside is about 90 cents as well. Well, the downside is probably a lot more. The upside is 90 cents. My bad on that. One of the bigger stories from over the weekend, which came out, we got some more numbers about how Spider-Man No Way Home is doing at the box office. It is now the sixth highest grossing film in the U.S. of all time. It has brought in a total of $668.8 million at the U.S. box office. It is just about $10 million behind Avengers Infinity War and about $31 million behind Black Panther. It got about $33 million at the box office this past weekend, so Friday through Sunday, which just passed. So there's still a little bit steam left in this one. It looks like it might come in and settle in the third spot right behind Avengers Endgame and Star Wars The Force Awakens. So a couple more stories that broke this morning. We have Lululemon come out with preliminary Q4 numbers. Basically, their EPS and revenue are both going to be at the lower end of their projected range, but still in the range of the given ones. I saw Lululemon was up a little bit on that. Ford sent a letter to its dealers warning them not to upsell reservations of the F-150 Lightning. So last week and a little bit past, there were some emails and stuff floating around the internet talking about Ford dealers that were upping the price of F-150s for the people who wanted to get their reservations first. There was one that was like they want to charge them an extra $30,000 to get the F-150s, the launch edition or whatever. So Ford didn't like that. They said it didn't constitute well with the brand, so they wanted to stop that. They did say that they do support having customers sign a new type of contract, preventing them from reselling the car within a year. So that would be very interesting if that ended up happening. There was a report from the Wall Street Journal talking about Microsoft possibly losing a decent chunk of their augmented reality team. So the reports that are around has lost around 100 people in the last year. That's of an augmented reality division that's around 1,700 people. So it's not a huge percentage. It's not like it's 40%, but it's a decent chunk of the people. And the article specifically said that many of them were leaving to go to Facebook or Meta, which changed its name to Metaverse. It makes a little bit of sense that people would want to work there who think that is the future. Seems like Facebook is much more going all in than some of these other companies. We have Tilray that reported earnings this morning. We are right on the cusp of earnings season. I would say it starts in full swing next week, but we have JP Morgan reporting on Friday. We have Citi on Friday as well. We have Delta on Thursday. So we're getting right back. I actually believe we have Taiwan Semiconductor, which is a huge one as well, on Thursday, if I'm not wrong. So we're getting right back into the swing of earnings season. Next week, we are fully back in it. We had a couple price upgrades here and there, which we won't touch into. Tilray reported earnings. They had EPS of $0 and 0 cents, which beat expectations of -9 cents. And then they reported revenue of $155.15 million, which missed expectations. Of $170.5 million. Fubo TV, ticker FUBO, also said this morning that they expect their Q4 revenue to come in between $250 million and $220 million, which would bring their full year revenue in around 622 million to 627 million. And then they said they expect to have more than 1.1 million paid subscribers as of the end of 2021. The stock is down about 1.57% so far, so not too much of a move there. With that, I'll throw it back to Gob. We got about 2 minutes till the market's open, but yeah, I think we'll talk about that section.
Sounds good. Yeah, ready to get rolling. A lot of people are definitely expecting some blood in the water today. Just taking a look at futures real quick. So give me just a second. I got to pull that up. Looks like my Wi-Fi is a little bit slower this morning, unfortunately. Okay. Dow Jones futures down 20.25. S&P futures down 0.67. Stock 600 down 0.76. Crude oil is down. The 10-year is down, and the euro is down. So pretty much everything is actually down today. So we're looking at a lot of chaos. Doesn't mean there couldn't be a rebound, but it does look like we're breaking through a couple of key levels. We talked about this on Friday when it came to QQQ, specifically the NASDAQ having basically its worst week in, I think it was 9 months. It now just fell below its anchored view up from recent lows. It fell below its 50-day moving average, its 100-day moving average, and it's got room down into the mid 360s where there's more of a volume ledge and a 200-day moving average. So could be a little bit problematic there. Going to be continuing to scan the flow, but we'll have to see what happens. The only position that I'm literally going to really be talking too much about today right now off the bat is that I do have SARK calls, which are the counter to ARKK, basically a short of ARKK. So we'll see what happens with those. Would be nice to see if Bitcoin and Ethereum, once we hit market open now, rebound to over 3K and 40K, but not a ton of hope. Looks like a growth is taking a hit just right off the bat. Celsius down 7% right here at open. Tesla down 2.69%. And a lot of other things are moving. So those SARK calls are already up 28%. We'll see what happens with those. I'm going to turn over to Richard. Would love to hear what you're looking at the bell.
Yeah, first of all, the market isn't right for my environment as of this moment. So I'm not trading today. I'm just waiting for setups and group themes to emerge. One group theme I am watching is the EV plays and also just kind of auto manufacturers, Ford, GM, Lucid, Tesla, those type of names. But right now, we've only really got, I don't know, a handful of names working. And for me, the big money is made, and I make a lot of progress in my account when these setups are everywhere, when everything is kind of pointed upwards, when we're trending nicely. And right now, that's just not really the case. We're just kind of chopping around and in a downtrend on the indexes. We're breaking new lows here on the NASDAQ today. The S&P 500 definitely a little bit stronger here. But I'm just kind of watching and waiting for my spots. The semiconductors is another group that was potentially leading, but now took a hit last week. The data storage group, MU, SIMO, those are holding up a little bit better. But like I said, I'm not really interested in trying to play just kind of individual names when the overall groups and the overall market isn't at my back and we don't have that kind of prevailing wind that kind of scoops everybody up. And I don't want to swim against the current, I guess is what I'm trying to say. So I don't want to force things when the market environment isn't right. So I'm just kind of taking a step back, stalking things, and waiting for signs of the environment changing. And what that looks like for me is basically when we start to see decoupling from the indexes from the major growth stocks. And what I mean by that is, like, on a day like today, if we're down 1% on the NASDAQ, but all the growth stocks maybe go down 1% initially or 3% initially, but then have a really strong recovery into the end of the day, and you see volume come in, and you just kind of see the institutions step in and support those stocks at a key level, even when the overall index still is showing a lot of distribution. So when that happens and we have decoupling for a few different days, that can mark the beginning of a potential new uptrend. If we then get that confirmation with the indexes, then all the growth stocks will continue to do well and fall through. But right now, we haven't seen that too much. And like I said, there's only a handful of leadership groups or even potential leadership groups. The EV stocks, the semis, definitely a lot weaker. And even the EVs right now are not doing great. Let me bring up Lucid, which is acting well into last week. Looks like we had a gap down and it's rallying strongly. So yeah, this is a name I'm definitely interested in. It's on my focus list. But like I said, Until the deck is hot and all the probabilities are really with me, I'm going to take a step back, focus on reading books, basically listening to podcasts, and trying to improve my trading in other ways, and trying to avoid just all this chop. And right now, a lot of my watch list still just very red, single out distribution. But if I do see those signs of decoupling and start to find those stocks showing relative strength, that's really my focus. Keep up with my routines and make sure I'm ready whenever the tide really does change and we restart the uptrend.
Yeah, I think that definitely makes sense. From everything that I'm seeing, and I'm in like 20 paid Discords, not that I pay for them, but I'm looking in here, everybody is just caution, 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 tight stop losses, stay on top of this. That is just what everybody is saying. I'm looking at, people getting in and out, like they're just scalping. I'm just, watching right now, seeing if we get a potential reversal here. And then I'm kind of, wondering if it can flip the opposite way as well, which we'll see. But yeah, these SARK calls are up about 66% right now. So we'll see if those do continue. It's kind of a lose-lose situation because that means that the growth stuff is falling. But just continuing to take a look. All right, Matt, what are you watching?
Yeah, all signs going off today. Market's coming down really, really, really hard. I'm watching it from the sidelines, keeping all my cash in my pocket. Today we have a key level, 462.5 on SPY, opening, gapping down, and all signs are negative. This could be a crash day today, ladies and gentlemen. I've just talked in my own stream about this, being very careful. We're likely to have a volatility explosion that's going to cause the market to liquidate further. This can be something that is very, very, very bad, and I'm scooping up nothing today. I'm going to sit on cash, let the market do its thing. I'm not scaring people, and I'm not chasing shorts, but these are all signs are bad kind of thing. Tech has been murdered out the door. The gap down on Apple is substantial, over 1% gap down. Even my shining beacons, financials, energy, not doing so hot. Oil futures coming down a little bit, so I'm very, 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 very careful today. The downside target of S&P, at least for this week, I'm looking for 455 SPY, maybe 456.5 to close out some of those gaps from previous couple of weeks. But losing 462.5 right out the door is nuking monthly options that expire on January 21st of this month, and happening within 2 minutes of market open is not a good sign for the rest of the day. So I'm not picking shorts. I don't like to trade in volatility. It's very hard to manage a short, but I'm looking at all things coming down today. I'm going to be very careful that the VIX itself doesn't create another second round of explosion today for volatility to create more downside. So be very careful today, everybody. Very careful. No picks.
Yeah. I heard you say about cash this week on our call the other day.
Yes, sir. Last
definitely
night.
could end up being the pick. It's really hard to see where this is going. Also, Danny, I see you in the crowd, and TSTR, I dropped you both some invites. My pick for the week was FAS, which started this morning green, up 1.5%, and has now pulled back to up basically nothing. Oh, let me take a look real quick at call flow. It's really just yet on call flow, except for Zynga. That's what Evan was talking about there. ZNGA. That was the one where we talked about how there was an acquisition. They are up 46%. I'm just taking a look real quick at the call flow on ZNGA. Ooh. So call flow on ZNGA here, we're looking at, what is this, the $6.50 dollar calls people are kind of piling into. Yeah, good money coming in on the 6.50, January 14th, January 21st. So people are looking for perhaps another run here. I wouldn't jump in on something with 46% in these market conditions, but teach their own. Okay, Gerg, what's going on, man? What are you up to today?
Yeah, what's up? New week, same old caddy, right? Docky, new 52-week low. ARKW, new 52-week low. Then you have Zoom, new low. Square, new low. ARK, the ARKK, new 52-week low. So pretty good morning. But
Especially
other
if you're
than that,
holding SARK calls.
yeah, especially if you're long SARK, right? And with SARK, we have a space at 6 p.m. So I hope ARK stays down for the day, right? Like imagine SARK is down 10% on the day we do a space. It won't be good, right? So ARK
No,
should be up.
today could be
Yeah.
like today could be like their best day ever. Could be the perfect day to have them on.
Yep. No, I think yeah. So ARK so far is down 3%. But I think, right, this is just a morning flush, so it might bounce back before we might even know about that. So, but for me,
Yeah.
right,
Mm-hmm.
I'm almost all in that strategy I was talking about, the buying these no risk plays and shorting the calls on that. So for me, my count is flat because with that there has been no calls bought and sold so far for the day. But other than that, I'm buying nothing. Even though right, my Palantir, my biggest position before, it just hit a new low. And I think it might even go to $12-13. If you're a short term guy, it might not be for you. If you like Palantir for long term, this might be a good time to scoop up some shares. In the last 2 months, the ownership is up 100% by the institutions. And we should talk about Lucid. So Lucid in 9 days has a big unlock coming. So 70% of the shares of Lucid were logged and all of them go live, right? So all of the previous investors, they had to wait 180 days after the business combination. That happened back in July. So there was also a pipe unlock that happened on the 1st of September. And the 2 weeks leading up to that, stock fell over 50%. And on the day alone, pre-market, the stock was down 30%. So, and this lockup is almost 600% bigger than the first one, right? Because the previous one was 150 or 160 million shares, and this is 1.1 billion shares. So, but with that, right, there's a bit of a dilemma too, because the Saudi Public Investment Fund, they own almost 63% of the company, but they want to build a factory in Saudi Arabia, right? So I think they maintain the 51% ownership, but even with that, they have to dispose 120 million and up to 140 million shares. And if you use the 10% that they rule, they will be selling for almost a month now, right? Because you see these institutions, they don't want to be more than the 10% of daily volume. And for the last 3 months, the daily average volume is 75 million. And if you use the rule of 10%, that gives you 24 business days. So it could take over a month. But the good thing about this is the PIF, they own more than 10%, right? So when you own more than 10%, you usually have to file a plan with the SEC. How do you want to sell that? And whenever they do that, we should know about that in the 72 hours leading up to that. So that's a plus sign. But looking at what Lucid did before, going short and trading the momentum and buy it back right before the shares go live might be a good trade, right? Because the only problem with that is I will make a thread about that almost, and everyone will know about that, right? So it might be a bit too crowded. So one more thing I'm looking at is Beyond Meat, BYND. They did announce some small partnerships last week, but if you look at the short interest rate, it's 42%. Even though I don't like the company fundamentally, the short side is way too crowded. I might take the opposite bet, right? If they have any good news, any big news, any good beats, I might take the long side just for the short term. Even though Beyond Meat is still way overvalued, it's like a food company trading at SaaS and tech multiples. That shouldn't happen. But the short side is way too crowded, and I wouldn't want to be caught with those guys. So BYND Beyond Me too.
Okay, very interesting. Yeah, it sounds like that SPAC strategy is probably the move here.
But yeah, with
With a.
SPAC, right,
Mm-hmm.
you might not make 100% moves in a week, but your portfolio won't be down more than 0.5% in a month.
Yeah, it's pretty fair. No, I
Have
want
you
to take
tried
these
that
big
finally
hits.
though, or will you do this week?
The SPAC strategy,
Yep.
I could try it this week.
So the Feb ones was netting you 8% with no leverage and no downside. So and most of the brokers, right, you can easily lever up 2 or 3x. So that's almost a 16% or a 22% return. And I think almost nothing in the market can offer you that, right? So
Very difficult to get that type of guaranteed return anywhere for sure.
yep.
Okay. So looks like as of market open right now, we have SPY down 1.08%. The Qs are down. There could be a small bouncing, not really happening. I sold one of my contracts for a small gain. On SARK, probably should have held it a little bit longer.
Yeah,
I'm
Wolf,
definitely
are we
yeah.
bringing back the trade of the week by Bullish Rippers?
I don't know, Evan, are we? It's kind of we're gonna have a Bullish Ripper space today during Power Hour. That might be the more apt time to do it.
Yeah, there were some cool concepts that we had with Ripper. Some things changed the back end, but we pulled a little bit Uno switch card, and we're kind of back to where we were before. So maybe a trade of the week makes sense. I know we've kind of got like a crew that comes on here every single time. We kind of were talking about maybe ways we could change the trade of the week a little bit, but we'll be in contact with you. I think there's some cool things we could do.
Yeah, making moves. Okay, let's see what else is going on here. So we had this initial kind of
Yo,
flush.
GME's down 10 fucking percent.
I have no doubt. AMC's also down 6%. I mean, all of growth actually is just taking a hit right now. The largest down I see is Celsius. Somebody picked that actually to go short in that call yesterday. CELH broke through every major. Oh my God. For anybody that's listening, just look at sometimes when things break through their 200 day in bad market conditions, it can just get real bad. Take a look at CELH breaking through its 200 day at $73, $72 and falling straight, literally zero green days, straight down to $48 per share. There really can be some fast moves. Other stuff, I see crowd still falling. Tesla's down 4.5% now on the day, so still falling. SE tried to rebound last week. SE did. Not too successfully, down to 182. A lot of people were looking at that under 200. AMD down about 4%, Square down about 4%. So yeah, I mean, our panel up here is not super like hitting on downplays typically, but this is kind of what we're left with. So Richard, it sounds like you're still probably holding back right now. Are there any areas of the market that you're seeing strengthen that you are going after?
Yeah, I'm not trading today. Waiting for that environment, but I am noting some strength. Lucid holding up really well, holding 40 on the lows today. Has pulled back from highs for sure, but it's holding around that anchor VWAP from the highs of the base. SIMO in the computer data storage group also acting well. It had pulled back and kind of drifted down on lower volume, and now is just kind of forming a tight day above the anchor VWAP from the breakout on 12.7. Ford is also a name I'm watching, holding up pretty well, holding yesterday's lows. Anything holding yesterday's lows at this point is showing strength, in my opinion. And also just bringing up MU holding up pretty well. It is below yesterday's lows, but it's holding the anchor view up from the earnings gap up on 12.21. So there's some small pockets of strength. But yeah, like you said, we're seeing a lot of destruction in some names, especially names like CLH, which have really been in a downtrend really since early November of last year. And like you said, lost a 200-day, really accelerated to the downside. And it's worth noting that even though it was holding up and trying to form a structure above the 200-day in early, basically January here, we also had a declining 50-day moving average. So anytime a stock is below a declining 50-day moving average, in my opinion, it's suspect, and it's just kind of worth waiting for really things to resolve itself and for it to really prove itself before taking on a trade in a name like that.
Definitely. Okay, it looks like the market just had a little bit of a jump back. I'm going to assume this was a move back up in crypto. Yeah, so Bitcoin just retook 40K pretty suddenly. If anybody's looking at this Bitcoin chart, this looks like it dropped to 39-ish, and just immediately there was buying pressure that came in. Could have been some, yeah, wow. Just look at that move. It's like a 1,000. That shit's crazy. We live in some wild times, not going to lie. So crypto just had a little bit of a move back upwards. Everything, Ethereum retook 3,000 for about a second. It's trying to hold it. If crypto can move back upwards, there could be some activity within the miners. I'm not going to lean too heavily into any miners just yet. I definitely, want to take the time. Looking at some other tech, PLTR is down to $15.72. Gerg, what are we doing PLTR here?
I think if you're a short-term guy, don't buy it. It might go $12, $13. But if you're a long-term guy, scoop some shares up.
Got to scoop the shares. Okay. Keeping my eye on PLTR, SoFi as well, down to $13.13. Shit is falling.
So far, the
But
$10.
if you're looking at one of these, I think just, you're hearing everyone's recommendations. Look at the charts, because sometimes you'll think about this and look at, SoFi. Be like, wow, SoFi 13. I want to scoop some dips, whatever it is.
Rivian is down 7% now. Finally,
So I would say just reminder of what like someone like Brian Shannon would say, which is just stay away from the downtrends. If a stock has had 4, 5, 6 red days in a row, there is no major support level that is sitting on top of. There's no volume that's sitting on top of. I really, at this point, like, again, we just mentioned, like, if you're a long-term investor and that name is something where you're like slapping the fundamentals, you love it, you're passionate about it, that's one thing. But if you're looking at this for short-term, and short-term, I'm meaning 1 to 2 years even, like that, because that's not necessarily super long-term. Do not buy in these downtrends. You're not
yep,
going to catch the
never.
falling
If
knife.
this year, don't buy a single falling knife and try to catch the bottom. I posted this last week, right? Because even last year, the runners ran and the stocks that were selling off hit new lows. So, makes no sense to fight the trend, right? Care for the markets gives you. So, like
Yeah, exactly.
Apple. Like Apple was hitting new highs every single week. Like you could have bought whenever Apple broke a new high, you could have bought that, traded off that, then made money. But if you were buying a dip on the stocks hitting new 52-week lows after earnings, your portfolio would be hitting new lows every single day. So don't
Yep.
fight the trend ever.
Watching call flow, there's still bullish calls that are coming in way out of the money on Zynga now. I see money now coming in on like $9 strikes. Is ZNGA? Has that been moving since we talked about that announcement? Not
Yeah,
really.
it did dump a lot at open. If you look at the volume, right? So at open, let
Yeah.
me check how many shares were dumped. So 36 million shares were dumped at open, but the volume is there, right? Because if the buyout has any credibility, they're still making 2.3, 2.4%. Because the buyout is consisted at 9.86%, if I'm not, no, $9.86, right? If I'm not wrong. And so
Yeah,
far, this is
that was
just
right
a
around there.
bid. It's not sure, right? Both of the boards have to approve this.
Yeah. People are also trying to catch Microsoft bottoms here. MSFT is what I see. I don't know why. I
So
guess they're trying
personally,
to dump.
right, I wouldn't buy any of these mega cap like Apple and Microsoft with the run they had last year. I wouldn't want to buy them here. Like I've talked to a couple of guys who work at both the companies, and almost all they talk about is Web3 now. So I think it's just a diversion short term. So
Okay.
I
Evan, you
do
want to?
look to
Yeah.
I look to one or two of those mega cap names which didn't outperform last year. And those are the names that kind of, if I'm going that area, get me a little excited. I think Amazon is the prime example of that. For me, for
yeah.
a year or
So
so
did you
ago, like
put in Prime because of Amazon or just a coincidence?
did I put in prime? What do you mean?
Yeah, you said right. Amazon is a prime example, and Amazon
Oh
Prime.
no, that was just coincidence. Thank you for pointing that out. I didn't even realize.
Even
No, but yeah,
Facebook,
I
right?
have 3100.
I think Facebook is the cheapest stock at that valuation, and almost trades at half of the multiples of its peers. So
Yeah, but it always is. That's kind of Facebook's MO with all those problems. And hey, name change. All those problems in the past are no more, but maybe eventually that'll happen. But that's just
Uh,
Facebook's MO is trading at a deep
yeah,
valuation or at a terrible valuation because everyone thinks privacy problems. Oh, I don't want to use Facebook or whatever. But the beast behind it is as powerful as ever.
you were
so I
right.
know that
Over
we.
the Christmas, the holidays, Oculus hit #1 out of nowhere, and that shows you how many people were gifted that right over the weekend. And Oculus is owned by Facebook too, for anyone wondering.
Real quick, Richard, I know that we only have you for about 6 more minutes. While we have you, since we'll be running for a little bit while after that, just wanted to throw a couple of names over at you to get
Sure.
charted. Okay,
Sure.
awesome. So let's roll. And obviously, these are in probably everything's in downtrends. So screw that. But here's one that's in an uptrend, which is FAS. Would love to hear your thoughts on that. And then two that are in downtrends. Would love to hear on Affirm and Upstart, which is almost like Gerg's price target. It's $10 off.
Sure thing. So yeah, first taking a look at FAS. This is the 3X Financial, I believe. And financials have been actually doing really well. They've been in uptrends, and this is one of the kind of spots of strength recently. This and kind of oil and gas names look pretty similar. So right now it's at, it looks like it failed to break out through kind of 151.50, which is the top of the prior base. A little downside reversal here, but it was straight off the bottom. And when you get a move like where it's straight off the bottom, right? And what I mean by that is you form a base structure, you form a bottom, and then you basically rally very, very sharply all the way from the bottom of the base right to the top. You might want to expect some type of profit taking along the way, some type of shakeout handle to form. Just because of supply and demand, people who bought at the bottom are going to want to take profits. But in general, this group has been pretty strong. It's not kind of the classic growth names I like to trade, but overall, there's been some pretty good opportunities in this group. Looking at Affirm, I think that was one of the other ones you mentioned. This, like you said, in a downtrend, it's kind of crazy. That's all the way back at 73 after being such a powerful mover from those gap ups when it announced the partnerships with Amazon and all of that in earnings. And this is, yeah, like you said, it's just in a downtrend below a declining 10 SMA even, and declining 21 EMA, 50 SMA. And like you mentioned earlier, it's unlikely you're going to pick the bottom. So why not wait until it really starts to round the corner, form up a tight consolidation, break up that, and get back above all those key moving averages. So that's kind of my take on these. What was the other name that you wanted me to look at?
Upstart. Yeah.
Yeah, sure.
And Coin.
Yeah, we'll do. Yeah, Upstart, similar to AFRM. This was a name I was trading pretty regularly in September through October of last year. Got some good trades on it. But then we had that gap down on earnings on very high volume, and then we lost a very short, stubby little consolidation, that low from the earnings gap down day. And from then on, it's just been a downtrend below a declining 10 SMA, 21 EMA, and 50 SMA. And these growth names, when they lose that favor and basically lose the bid, can fall very, very sharply, as people are probably aware of as of this moment. And this is just stuck below the declining moving averages, and looks like it's right at the bottom of the consolidation all the way back in July of last year, down near looks like 105, 108 spot. And like I said, there might be some oversold bounces here, but I think if you bounce back into declining moving averages, that's always suspect, and it might be good for some short swing trades, but not necessarily for a longer term buy. Let this really round out things and build a long-term base, and that could take years. We never know. If you look back at SQ, that's a good example of growth names where they have a 200, 300% run. And then if you look back in September of 2018, the stock went nowhere until 2020, really. So be aware that these growth names, once they start basing and no longer are in those strong uptrends above a rising 50 SMA, they can base and just kind of chop around for a lot longer than anyone thinks. So lastly, looking at coin, let's take a look at this. This is also just in a downtrend below a declining 10 SMA as of this moment, and breaking below the 10-1 from 2021 lows around 225. Doesn't look great, just in a downtrend, and we'll have to see whether it can hold all-time lows. I think that's a pretty significant level, and that low is at 208. And maybe we get an undercut of that, and then a rally back up, and then we start a longer-term basing pattern. But when it stock's in a downtrend, nobody knows how long that downtrend is going to last, and how far down it will go. So I prefer to stick with stocks showing strength and holding up well and being involved when they are in uptrends and really the tide is with me. So I think I probably have to step aside. I've got a meeting, unfortunately, but I just kind of want to say, make sure you guys are trading when the environment is right for you, basically. And if the environment isn't right, think about when you made the most money in the past. And if the current environment doesn't match that, think about whether you really have an edge, and keep focusing on managing risk and those stocks at uptrends. That's kind of my final words.
Love it. Thank you so much. If anybody's not already following Richard, one of the best follows you're going to find on here, and I haven't found really anybody that puts in more time to their craft in order to contribute, to the community. He also has 44,000 followers on YouTube with some of the most amazing interviews you'll see of the top U.S. investors and so many more. He's also only 1,000 away from 69,000. So I think I've given you a lot of good reasons here to go and follow Richard. Thank you so much for coming on, Richard.
Yeah, my pleasure. Thanks so much, guys. Take care.
Awesome.
Yeah,
All right.
so let's talk about coin, right? So coin, I think, will be a hell of a trade after the earnings of this quarter, right? So before the next quarter earnings, that should be in 3.5 months, they have the NFT platform coming out. And NFT platform already has over 2.2, 2.3 million signups. And the monthly active users for OpenSea right now is 1/10 of that. And I think the day that goes live will be the biggest liquidity influx in the crypto and NFT space. And Coinbase will charge a percentage of all the transactions, right? So I think that might boost a lot of their numbers for the following quarter. And almost no one seems to be talking about that. So the only thing with that is, right, the data for this quarter doesn't look that great because the month-over-month traffic data track for Coinbase is down 12% from the last quarter. So I wouldn't risk holding through this earnings, but buying after the earnings sell-off right before the NFT platform goes live can be a very good trade in my opinion. So,
Okay.
yeah, anyone who has used OpenSea, they know the platform sucks, right? Like OpenSea is garbage. Like over the
it's down, which is pretty sad.
over the weekend they raised at 11 billion, right? 11.5 billion valuation.
Yeah.
And you have like the worst front end. So glitchy doesn't like even yesterday they were down, right, for 7 hours. And when you go and buy something, they give you random arrows. Like even if it's already gone, just pull it off. Stop showing that. So really, really bad UI UX. And very, very hard to use for most people, I think, right? Connect the wallet. It's
You
not
on there
doing
buying apes?
Yeah, when you buy both they're bright.
Gerg, you're more of like a right-click save kind of guy.
Yep.
So.
I mean, I don't get the point, right? But I did buy some, so I don't miss out. Like, I'm not bullish on the space. I just bought some to have some exposure. If they do, like, finally pop up, right? You never know. All of them are worth 10, 20 million in a year, so I think it's worth the gamble for me. But as an investment, yeah, not for me.
Yeah, I hear you. All right, Matt, I want to get you back into this. It sounds like you are kind of sitting it out, but I'm sure you're still looking. Are there any areas of strength? And also, are there any areas of weakness that you think could be preyed on? Or are you just, still kind of standing pat? And real quick, before you do go, just want to let everyone know I'll drop a map actually right now. A lot of red. Your leading red names today are Tesla, Amazon, Home Depot, Microsoft, Nvidia, all pretty far down. You're also seeing the household and personal area of the market is down. Discount stores are down. Real estate's down. The areas that are slightly green, you do have some green in healthcare. So stuff like Bristol Myers Squibb. The capital markets are holding up okay. Looks like Goldman Sachs, if you go into GS, I believe is green. Still about 0.5% green. And you also do have Morgan Stanley. That's one that a lot of people were looking at. I think that one's also about 0.5% green. Oh, no, it went red. Okay. Well, those are what are factoring into FAS, which we talked about earlier. And I guess aerospace is a little bit divided. Healthcare looks pretty green to me. Lightly green, maybe about 0.5% to 1% up. Banks are doing okay. So we've kind of talked about the regions that do well within this market and looking towards areas. So if you're looking towards areas of weakness today, consumer cyclical, semiconductors, communications, technology, electronics, just all very, very weak at the moment. Even financials are really doing pretty bad with PayPal and Visa and stuff like that. But then your strength is more like banks and capital markets. Those are really the main areas in healthcare, I guess. And for some reason, I guess like tobacco is kind of doing pretty well today, and beverages. So that's kind of just like an initial look. But I can post a screenshot of this. But Matt, what's on your radar?
Yeah, nice analysis. I'm starting to feel like the Oracle from the Matrix because lately it seems that every time we meet, Neo, I have nothing but bad news. I'm sorry about that, kid. I surely am. Because right now, this has been one of those weird times where the market is responding poorly to potential quantitative tightening, aggressive rate hikes, and of course, any type of, or like aggressive tightening and rate hikes and a lot of other things that the market responds to. Now, I'm going to tell you, my thesis is not bearish for the long term. For the medium term, the S&P and other things are going to trade down. All the sectors are going to look bad. Semis are going to get hit the hardest this week. I'm looking for my model. Energy is going to get hardest this week. The things that were moving up the highest are going to get hit the hardest. So even though some of my kind of beacons, Morgan Stanley, Bank of America were the two that I was watching, they were opening green, still turning red a little bit. Bank of America has support at 49. Once that guy gets knocked out, I think most of the market's going to trade off today. I just posted a tweet, shared it with the space. We're entering what's called a volatility event, where we have a calculation our model does called hedge pressure, which is the net gamma balance against market maker options. We look for that particular push. And when that breaks on indices, the entire index comes down. But when that breaks on the VIX, the entire index comes down exponentially. So today is one of those days where everything is likely to come down and come down hard. There are no good picks for me. I shouted this last night when I had the least sexy comment about my play of the week, which was cash. We woke up this morning and I'm glad that was my play, and that still is my play probably through Wednesday. It's going to be pretty bad. I've been digging all morning looking for winners. I can't find a single one that actually looks like a safe bottom scrape today. Some of my favorites, like Boeing was something I thought would be pretty okay. I think Boeing will probably hold 200. We're not going to touch it today, but I think middle of the week, some of these plays like financials are in it, and Boeing, I think, so I have Morgan, Bank of America, and Boeing are the three I'm watching. And I think middle of the week, those are going to maintain strength. I think tech and semis are going to get hit hard this week, and I think that's going to draw and pull the entire indices down. My call for overnight was 4,602 for the S&P. We ran right to that out the door, and I think we're going to fall even lower. VIX has broken through key levels today. The VIX itself. So when the volatility becomes volatile, the market becomes so illiquid, there is just nothing to catch it. This is a day that crushes dreams, breaks hearts, ruins families. So be cautious, those of you out there.
You mad? It's not that deep yet.
It's not what?
It's not that
Ruins
deep yet.
families. The bearer of bad news.
Yeah,
Jeez.
it's not that
wait,
deep
I'm sorry,
yet. Like
you're
Spy,
bullish.
it will be down 3% from
Dude,
all-time highs.
isn't paradise in your name? What?
I
Yeah.
know, I sound like such a bummer today. I know, I hate being the bearer of bad news.
No, Mad. When Spy is down 10% off from the highs, when it will be soon, you can say that then.
Yeah.
I think it's a bit too premature to say that.
Yeah.
Families will be destroyed, dreams will be destroyed. So
I know.
yeah.
And I don't even get started on how I think Bitcoin's the next thing to get murdered. So I have a
What do you
whole
think about
long-term
Bitcoin?
thesis
How
about that.
low does that go?
How low is
10,000?
Bitcoin gonna go?
Yeah, what do you think?
Probably as low as you think AMC is gonna go. So
The negative $5?
yeah, I have this whole thesis on how something that has finite supply can be a hedge against inflation. So that's this whole nonsense I can fight against, but not to break anybody's hearts further on Bitcoin.
But isn't
yeah.
gold kind of finite too?
Yeah.
Kinda.
I mean,
when
we
the
do
meteors
have
come.
gold on other planets, asteroids, but even with that, right, the quantity is limited.
Just something to keep an eye on for anyone that's listening. I am having some short indicators go off. Oh, we should also definitely repeat, nothing we say here is at all financial advice. This is purely for ideation.
Nothing at all. Yeah.
Ideation purposes. If you are going to do anything, my recommendation is you take the name, you go ahead and plug it into your handy dandy Google. You then go and you look at the fundamentals, you go and you look at the technicals, you look at momentum, you look at volume, and you put together a full picture before you place any investments, short or long. The only recommendation that I would say you could take as financial advice is MATS, which is cash. That one I think is okay.
I have this way of saying this. It's like, we can't give you financial advice, investment advice. I can't tell you what to do with your money, but I can tell you what to do with your hands. This is skincare advice. Take your hands, put them under your ass, and sit on them and exfoliate your hands by just sitting on your ass, on your hands. So,
boom.
Skincare advice.
So, we also, just a couple of short indicators that are going off. I am getting short indicators on NNOX, which probably people, if you've looked at NNOX, you've noticed that it's in quite the downtrend. I just got to pull a little bit more data on this, but I think it's an all-time low. I'm not 100% sure. It's not loading me more data. Okay, yeah, I think this is a new all-time low. For NNOX fell below, I believe it's
What stock? I will check it for you. What's the ticker?
NNOX.
NNOX. So with NNOX, it's 1179. Yep, you're correct. New all-time low.
Yeah, so that is moving low, and people are kind of coming in on that. So this was a block. So just for anyone that's familiar, a couple things we'll talk over today. When we're talking about option flow, there's two different types typically of consolidations that will come in. You'll have spreads, or you'll have, it's not a spread, the sweep. You'll have a sweep and a block. So if you're looking at it, I personally mostly just pay attention to the sweeps unless they come in right with a block, because the block is a pre-negotiated contract, essentially, meaning that somebody could have gotten at a better price. They could have come in size. I don't typically look at it, but what I will say is, good Lord, there are some big blocks of puts coming in on NNOX this morning, totaling right now, I see almost $10 million. I think over $10 million of puts that are coming in on here. So just something to keep in mind. Also, going back to what Matt said, I will push back on having money in cash. I've been getting way more into this. So if you've been on some of my spaces, you've noticed I would crypto stake that money, and I would put it in a stable coin, and I would earn 10 to 20% APY on it. In the meantime, super liquid. You can get in, you can get out. That's what I would do with my money. I don't keep money in cash. I just stake it. I can do a space on that if people are interested. It's super easy. I did a space last week teaching people how to literally earn 9% APY by basically doing nothing. You literally just download an app and put your money in. But with that all being said,
quick question about that. I have a question. When you pull out money, how quickly do you get it? And is there any restrictions with how much you can pull out?
No, as soon as you pull out, you get that.
Yeah.
So I use crypto.com, right? Up to $1 million, you can stake it in seconds and get it out in seconds.
But doesn't crypto.com require you to keep it in there for 6 months or whatever? Isn't that the whole
No,
thing?
right? That's a good part. So they have three options. One is you can take it anytime. That offers you 10% a year. The next option is monthly. You log it for a month. That offers you 12%. And when you log it for 3 months, they offer you 14% APY on stable coins.
Yeah, mine there is no set. You can take it in and take it out anytime that you would like. Obviously, you're just going to earn less if you pull it out. Okay.
So what, Gav, what is the? Teach me about that, because I don't actually play in that world. But how do they stay stable? How do they fight liquidity and volatility problems?
So with that, right, USDC. So USDC is the better one, because this one is backed by Coinbase and Circle, while Tether just puts money out from thin air. That might be the best shot of our lifetimes, but you'll talk about that in some other space. I think Wolf, right? You did a space, right, about Tether, I think a couple months back, right?
I did do a space on Tether a little while back. That one, yeah.
I remember that I was there. Yeah, I think that's the biggest scam. But I only stake in USDT. No, USDC. Like they sound
USDC is good. I stake USDC and UST. I stake both currently. You can just get more for UST, and I don't think that it's going to collapse, at least for another couple of years. If it was
so for me, right, I don't want to take the gamble, right? I think it eventually collapses, but it's very, very hard to say when.
Yeah. But Matt, when we're in person next week, I'm happy to show you all of it.
Yeah, I'm down to learn. Okay.
So so the platforms, what they do is they act like banks. They give out the loans at higher rates, and they keep the difference. And some other instance, they use that money in pools, right, to provide liquidity, and you get every percentage of the trade, and the platform pays you at the end of that. So basically, you're market making for crypto.
Yeah, I think it's a really, and after we do this, I just want to cut this and go to Miguel, but it is, I think, a really difficult concept for most people to comprehend, because they've been kind of sold this lie for their whole lives, where they are being told, like, hey, you should accept 0.5% on cash. You should accept 1% on cash. And they're also being sold I think it's kind of a lie that, like, you should, put your money into something that is a risky machine and accept 9% per year and be happy with that. And a majority of people don't do better than that. And they're kind of being told, like, nobody, like, the reason that you should take 0.5% from the bank is nobody's like paying high amounts for loans. And that's just not true. There is a ton of people on the internet who are very desperate for liquidity. 80% of that demand, I would say, is probably high yield traders who are just looking for arbitrage opportunities and other stuff like that. And they are very much willing to pay super high APYs, much higher than 10, 20, 30% in order to borrow money on short amounts of time. So it does exist. The liquidity is there. You can take advantage of it by being the bank. It's kind of like when you're buying and selling options. For anyone that's familiar with the covered call strategy, a lot of people use that to bring in an extra, 10, 20, 30% per year. It's great, right? Because you're being the casino, you're being the house where you are saying, instead of buying this risky asset, I am going to sell it to somebody else and take the risk averse side to it, typically, if you're doing your research correctly. And it's the same thing here where it's saying, instead of me buying and being the investor that's going to hold the currency, hold the coin, whatever it is, I'm going to be the bank and I'm going to put it into liquidity pool and lend it out to others and then take that APY. You're just getting a much higher APY because it's all decentralized. It's a much easier system to borrow for. People do not like borrowing from banks. To be honest, it's a very tedious process. And if you're going to do it in the US, you probably have to have like a social security and a bunch of other stuff that a lot of people who are borrowing worldwide don't have. So this makes it a lot easier for people to come in with size, get in, get out. It just makes life pretty simple. Gert, you want to do any last comment, and then we're going to go to Miguel?
So with that, right? So like Wolf said, a lot of platforms offer rather. I think, who did you have last week on your platform on your spaces?
I had Outlet Finance.
And how much are they offering? I think they do all the work, right? You said.
Yeah, they do all the work for you. You don't have to do any swaps, any fees, anything. Right now they offer 9%, but they're moving to 15% in a month and a half.
So personally, I have never used them, and I can't fault for them. But I think 15% sounds pretty good.
Yeah, I mean, I've been using them for over a year. I also have had a number of Zoom calls with the CEO and founder. I've gone through their pitch decks pretty religiously. I know that they're raising a lot of capital right now. I also know that they're hiring. There are certain things when you're looking at companies that just stand out to me. Having worked at a startup for years, I can see what is a healthy attribute versus non-healthy. Mass hiring, very healthy. Like, that is a good thing to see when people are going out and saying, I'm going to triple the size of our workforce. People that are raising, upwards of $10 million from reputable investors, that makes me feel good. Somebody probably did due diligence into them. A CEO that's willing to come on a public call and answer questions from an audience, I like that. So those are all things that were lining up for me. You can choose your own service, but I'm happy to do more spaces on this type of stuff. But let's move back to stocks real quick. Miguel, you joined us today from Wiz Day Trader. You've been reaching out to me and we've been chatting. So great to have you on. What are you looking at today in the market? What opportunities are you seeing?
Hey, thank you for having me. Yeah, I'm at Wiz Day Trader. This is my personal account where I talk about what I'm trading and what I'm looking at in the market and what I'm kind of doing for clients, because I manage private clients. And then in addition, I have a separate account called SX Trading, a company I started during the pandemic, where I tweet out charts and other stuff, and not like personal positions. So what I do and how I approach the market is, I don't care what the media says. I don't care what you guys have to say sometimes, although I do because I'm interested. But the point is, all I really care about is price. So what is price telling me? So before we came into this year, right? Actually, it was the last call that you guys had, I remember, and it was on the 1220, right? We were like talking about, when are we going to get this Santa rally? And everyone was really bearish on that call, which was really interesting. So we had like a gap down day. And I was looking at the charts and I was like, well, the SPY is at the 100 SMA and that's a moving average, right? I do technical analysis, right? So I look at the MACD, stochastics, RSI. And if you want to learn more about that, you can go on my website, on my blog. I have some blogs that talk about how I set up my charts, what indicators I look at, right? And so you guys were kind of bearish, and I was like, I don't really see it really bad because you have like energy hitting the 200 SMA. So I started getting bullish, right? And ultimately, my year-end target for the market, or I had 3 targets that got met this year, and my last one was 4,800, and actually we achieved that, I think, just before the new year on the SPX. So I was like, well, my target's getting hit. I move my positions. I sell my positions when my targets get hit, and I'm happy, right? Tesla this year, I had 1,000% gain from the pandemic lows, right? I had called, like I had congratulated that guy that Elon keeps on taunting. David Einhorn, in a tweet as like a joke. And I was like, congratulations on shorts. And that was the ultimate bottom in Tesla. And I was up 1,000%, when that was rallying. I wanted to be taking gains, and, I had bought some calls on 11:15, like 1,400 calls. And then Dan Ives came out with a call that's going to 1,400 too. So, like, when you see these analysts start upgrading, you want to start selling these positions because they're when I have my expectations and I think that something's going to go up, and then the street and other people start getting excited, I'm like, I don't really like it as much. But I'm kind of interested. The SPY is curious right here. I think if we could touch the lower Bollinger Band on the daily chart and maybe get a bounce, because the gap from what I was talking about on 1220, that the high is 455.40. I wouldn't mind taking potential trade at that, right? Because of the Bollinger Band. And a Bollinger Band is basically you just see when the market gets overstretched, or too much to the upside or the downside, or maybe we're in between a position and we're not really going anywhere. I'm short Apple, which I told you about. When we had the news come out that it hit 3 trillion, I think that was a perfect time to short. You can see on my Essex trading account, I have, a chart, and there are, it's a mathematical concept called Fibonacci that I'm sure some people are aware of. It's just basically ancient math, and it works in the market, and it's fantastic. And Apple hit the 138.2% Fibonacci retracement, from its 200 SMA on 12/24/2018, and we were taking profits. Apple hits 3 trillion market cap. Fantastic for them. But what does that mean for us as market participants? We want to be selling, and ultimately I could be taking a hedge against my position. Say I'm, I have a lot of Apple stock. I'm heavily invested in the company, and my kids have it. And I'm like, hey, maybe I want to take a position. I'm gonna take some profits, right? Apple hits 3 trillion. That's great for them. Let's take profits. But what am I doing as an investor, as a trader, right? And so, what it's an interesting spot here for Apple, right? So if I'm short, right, for a trade off of that news, right, which was around January 3rd, I'm going to be looking at 167.46. So I just told you about the SPY, and it sort of correlates with this 167.46. So I'd be taking maybe, some short-term profits. But, this is an interesting setup we have on Apple because it's a potential top, right? It's called like a M for murder. When you have a W for a bottom, M for murder is when the stock goes up and tests its high, right? Which was a week of 12/13, and then we had 1/3 last week. And so if we break below 167.46, I'm going to be getting pretty bearish on the market, to be honest. I know Matt was talking about cash, but I want to start shorting some positions, to be honest. Banks was starting to look good, but this might be a failed breakout, to be honest. Below $41, I'm getting cautious of banks, right? We have the MACD is diverging negatively, which I don't really like. And, we held that 200 SMA on that day that you were talking, again, that I was telling you guys you were pretty bearish. But, I was saying, like, you probably want to take profits as far as risk and reward in 46.80, because that's the previous high for the banks here. But it'll be interesting. I mean, the banks have been outperforming because of rates, which is kind of interesting. I'm short ARK too. Obviously, I think a lot of people, the fund has just not been great. But I don't really care whether they're doing this, that, and the other. All I care about is price, ultimately. And I think ARK goes to 70.25. It tests the lower Bollinger Band on the monthly chart, which coincides with the 50 SMA, because it failed previous SMAs like the 20 SMA. And for other people who don't know, SMA just means smooth moving average, right? And it's an average based on price. So it's just a mathematical concept. And if you want to learn more about that stuff, a lot of where I learned this is the CMT, Chartered Market Technicians. I have a book. I was going to take the exam. I didn't end up taking the exam because I got exposed to someone that had COVID. So I haven't taken it yet, but reading the book and that stuff is really great. So I think ARK, I think the ETF goes to 70.25 ultimately. And then that's
17 or 70?
What's that?
What number? 70, 17?
70
Oh, okay. Okay.
That's the 61.8% retrace of this monthly chart, right? So you can do a Fibonacci, right? What I do is I do this Fibonacci, right? And I measure the move from the high to the lows, and that's on a monthly chart. And then, it also coincides with the lower Bollinger Band and the 50 SMA on the monthly chart, which is probably somewhere I would want to be getting long, right? As far as Tesla too, I do like Tesla here, which is kind of interesting. It's on, as far as the daily chart, it's got the 61.8% retrace is 10/12/55. The MACD is crossed over, which is a little concerning, and it's below some moving averages. But if it can hold here, I kind of like it for a trade. It's kind of got this bull flag it's setting up, and it's been one of the outperformers. If you look at Microsoft, Microsoft is broken down, which is a little concerning. So a lot of these high tech flyers, right? I was selling Microsoft actually last year around 345. We were taking profits for clients, and this is a very bearish pattern that Microsoft has on it, and that's really concerning. A lot of people came in bullish at the beginning of the year because we had a rally in the market for the Santa rally, and that's fine, that's okay. But I don't really care about all those statistics. I just want to look at price and approach the market objectively and be disciplined, because I think that's ultimately the arbiter of truth. Everyone has a position in the market, and all it is human behavior, right? So if I have a price and you have a price, well, I'm looking to sell it higher than you are. But if it doesn't go up that high, then I have to get out eventually. What I really like is I love crypto here. I think the sentiment is really bad. I was shorting Ethereum or doing it as a hedge, but I like mine and stake and do all that stuff. But the Ethereum is hitting the 38.2% retracement here. And as far as, I could take off a hedge here for some profits, 27, it failed the 37, it failed the 23.6% retracement, which was support. We saw that, it kind of came down, tested that, created a bear flag and came down. So, that's not good for the, Ethereum, but, we said, okay, well, below this level, we'll think about it. And so we shorted that, and we're taking profits here. We're taking some short-term profits. 30.35 is the 38.2% retracement. The RSI now is at 27, which is generally not good, right? You don't want that RSI. You generally want it over 30. But if I'm short or I have a hedge for my long position, I don't mind taking profits here, right? I also think, the monthly didn't do like a reversal, but it was the last monthly candle. So if you hear what I'm talking about, candlesticks are just Japanese candlesticks that measure price from high to low, based on whatever time frame you're looking at, high, low, close, and open. So last month you had like a bearish engulfing versus the previous month of November, and that was bearish, right? People are selling constantly, And Vitalik is a $1 billion guy. So when the news like that comes out, you want to be selling. And I'm getting a bunch of spam, NFTs, like NFTs this, that, the other. It's crazy on Instagram. And I'm like, this is kind of like getting out of hand. So you kind of like look at price and you coincide with what's going on by market behavior and you make decisions on that. And now I'm like, okay, I'd like Ethereum here for a trade. I'd be long above 30, 42. And, I think, I got some Ethereum here and I like Bitcoin here too, which is really interesting. Bitcoin is, if we stay above 40,000, I think it's pretty cool right here. I think it's really interesting. We've got a 1, 2, 3, 4, 5. It's so I do Elliott wave analysis in addition, right? You got a 5-wave down here, and on the daily chart. I was getting bearish before this, as I said, if Bitcoin doesn't hold that 200 SMA, right, which was right around 47,972, right? That's not good for Bitcoin. And ultimately, what the 200 SMA is, it's like a long-term moving average that a lot of market participants look at, right? So if you have a long-term strategy on Bitcoin, that's something that's concerning, in the longer term. But for here, it's hitting the 38.2% retracement, which is 41,982.90, right? Of the 2018 lows, right? So I don't want to be, I'm looking to put on a position here. I'm hesitant, right? But, I'm looking at the MACD, and the MACD could diverge positively here. We got some of the bars, and it's like, well, the bar is like in the, the histogram bar is like kind of at the apex of the histogram. Generally where, some of the price turns around. So I'll be looking at that, right? But I take it on for a trade. And look, we always stay disciplined, right? We put on a trade, we always put our stops in, right? And if it goes against us, it goes against us, right? And if we want to, put, another position on because we got stopped out of our position, we could do that too. But that's also why I started SX trading, is because I wanted people to understand, like, your position should be green all the time, right? If you get up in a position and it's red, you should probably just get out of it, right? Because there's a lot of mental capital that you lose by not being in a green position, and other things like that, right? It's an emotional, physical capital, and then you're in something that ultimately continues to go down. So you just want to be careful when you do that, right? So you put your stops in and you be disciplined, right? Like any good investor or trader should be. I also like bonds here, which is kind of interesting. I think it's been pretty bearish. There were a lot of puts that were bought previously. I know I was looking at it around 12.7. We got that bounce up to 20 SMA. And then I was like, all right, traded for some options because I was curious. I was like, oh, maybe the market, based on that action before, might go down. But, bonds is going to hit. But I like it here. The RSI on the daily chart, so the 20-year treasury bond for TLT is right around 30. And, those people that are short probably taking some profits here. So, and like considering the market is coming down, you might want to, buy some bonds. So that's kind of a tell maybe for the market overall. And then something else I look at is HYG. This is something else that, I did not want to be long the market when high yield corporate bonds could not hold that 200 SMA on the daily chart. I mean, it's just, that was really concerning to me, and that failed to hold on 12.27, right? And these are bonds that corporations are buying. So if these are prices that are going down, then that's a problem. So we hit the 61.8% retracement on the daily chart, which was right around the 200 SMA. So we got an ABC bounce, this is what it's called, after a 5-way pullback. And, it I mean, you look at this, and it told you what was happening in November too, and it just pulled back, and that's really concerning. But we're touching those lows again right here, so maybe we'll get a bounce here again. So I mean, you see how this coincides. Apple hitting a spot, the SPY is hitting a spot, HYG is hitting a spot. So these things coincide for a reason, And now, if it can't hold this is the weekly 200 SMA. If it breaks down below that, that's really concerning to me and for the overall market. And then, if I want to look at a longer term, I'll zoom out on my Fibonacci here.
Let's wrap up on this one. Just going to keep it rolling.
Sure. I'm just trying to tell you, so when I look at everything, if I look at something, I want to have like an overall thesis of why I'm looking at something. And these all the charts coincide together. So I develop my thesis based off of that. So a longer term, if we start breaking down here big, then $80 on HYG is a potential spot. And I'm short HYG too, longer term. So I have a position there, short.
Very nice. Yeah, I thought that was a well put together case. There were definitely some interesting takes. Yeah, I understand the mentality of having all your positions be green. Unfortunately, it's not always realistic, right? Sometimes people do get in, they find a stock that they really like, and they're going to, either set a little bit of a lower stop, they're going to roll with it. I think that there's value to the mindset, but that there's, it's not always so applicable to the audience I think that we're talking to. But with a lot of the other plays, I think finding your bullish and bearishness, I agree with the 200-day simple moving average. I think there's a lot of water and weight that holds in a couple different areas. So thank you, Miguel, for coming on and for sharing that.
Yeah, happy to. Yeah, I think just the comment on your position should be green is the fact that, I mean, I guess we're all, especially if they're listening here, we do this every day. So if they're looking at what we're trading at, I mean, I'm always disciplined and I'm waiting for like the time to, enter my position, right? But generally, if I take the time to enter the position, I really don't, if it goes against me, I don't really want to be in the position because that's more mental capital. So, if a long-term investor, you're going to be patient. But if you're a trader, I mean, you just want to be in a position where you're not taking huge losses, because that's just going to, if you think about it, you go into a casino and you have a bunch of money that you start out with and you start losing a bunch of money. Well, you can't play anymore if you lose all your money, right? So being disciplined and not letting our positions turn into big losses is really important. And
yeah, 100%. I agree with that. You got to pull the reverse Kathy Woods. Cut your losers, buy more winners.
Yeah, I actually I applied to go over there, and I think if I had went and worked with Kathy, I would have told her, hey, look, maybe one thing you should consider doing for fund is hedging yourself.
Yeah,
I do also think on top of that, though, like Kathy is trying to do something very, very different than you're trying to do. When you're trying to cut your losers, that's really much more of a trader's mentality. Whereas someone like Kathy, a long-term investor playing over 5 years, those drawdowns make a little bit more sense. And I 100% agree that she probably and definitely should be more hedged. But I do think the perspectives are different when you're kind of talking. It's apples to oranges in this case.
Oh yeah. I also just want to say the only play that I did call out today is at the open. SARK calls. They are now up. The stock's up about 4.8%, or the ETF, and the calls are up 84% on the day.
Wow, nice.
So,
Yeah, Wolf. So what's with the stock space? I have heard about that. And are those rumors true about the space happening today?
Yeah. Rumors are true. The space, I don't know if anybody saw. For anybody that's listening, first off, we haven't really said this too much, but we have actually a pretty select panel up here today. If Stars would come up, that would be dope too. He might be busy. But this panel, we've been doing this every single week for 4 months straight now. Good Morning FinTwit. Every Monday we come on for hours. We've been here through the good times, through the bad times, found opportunity. I think we've had at least, a couple of green plays given on every single one of these. If you're not already following myself, Stock Market News, Gerg, Bullish, Matt, we've been here every single week. Miguel is our guest for today. Stock Talk Weekly is usually in this also. So really, this is a great crew to be following. If you like spaces, if you like analysis, we pull from fundamentals and technicals. We have futures traders up here, crypto, a little bit of everything, growth value, whatever you are searching for. In addition to that, we have a ton of spaces this week, including a
Yeah, well,
space
I have a
focused on
question.
SARK. Yeah.
You have so many spaces. How can someone keep track of them? Like any better way to keep a track of them?
That's a question that I asked myself many a time. You know, I spent sleepless nights sitting there. How am I going to know when all the spaces are? If I was a person who is, you know, maybe you're just following the Wolf account, maybe you're not even following the Wolf account, big mistake. But in that case, how would you know when all the spaces are? And myself, Stock Market News, Gerg, Stock Talk Weekly, we're all collaborating on a way to make sure that everybody knows. And that is a free public Google Calendar. It is the single best tool, in fact, possibly the only tool for finding elite financial Twitter spaces on Twitter. And all you have to do is DM either myself right now, hop on the DM. My DMs are open. DM myself or Stock Market News. Shoot us over your Gmail and just ask me put on our Google Calendar. This will send you an email. You can then toggle on and see every single space on your personal calendar. You can toggle it off if you don't want to block out, you know, if you don't want to have too much clutter on there. And if you don't like it, you can feel free to unsubscribe at any time. It doesn't even send us a message. No harm, no foul, but you're going to love it. So if you're not already on there, first off, make sure you're following these accounts. We will be at the top of your timeline. I'm going to do like 30 hours of spaces a week, so I'll make it worth your while. Number two, shoot us over that Gmail. Get on this. There are hedge fund managers on it. There are people who work at Twitter. The rumors are confirmed. People who work at Twitter have DM'd me and asked me to put on this calendar. Millionaires, people that are verified, every single type of person has been on this calendar. So that is what I have for that. That is your best way to find this. I see some DMs coming in. You are very welcome to come in. We will get you on this ASAP. Okay, let's keep it rolling.
Kyle,
Yeah.
I have a question though. What happens if we miss the spaces?
Oh, if you miss the space, we upped the game. So as you can see in the top left corner of this space, every single space that I host, that Evan hosts, is recorded. So all you have to do is actually go to the calendar. Let's say you miss this space this morning. You would go into your calendar. You would look at, you'd see Good Morning FinTwit. You'd see in the notes all the speakers that were supposed to be on here. And then underneath the speakers, you would see a thing that says recording and then a link. And that link would take you to the recording from the space. I will be up in my game, getting those in there faster this week. So you can actually go ahead and find recordings as well. You know, everything is your one-stop shop for spaces, speakers, recordings, and like we're pretty picky, I would say, with who we bring onto our spaces. Like Miguel, you can tell, like when you reached out to me, I was like, yeah, like you got to interact, like we got to feel, yeah, we did our due diligence, right? And yeah, like that is just how it works. So you know, you're gonna get the cream of the crop up here. That's just how it works. And I think that kind of sums it up. Evan, where did you want to go next?
Yeah, so I think that's pretty great. Great explanation of it. One of the best tools that we've created. You know, I do just have a comment, and then we can maybe slide. It's not necessarily an overall direction for the spaces, but you know, these type of big red days, a lot of FinTwin, a lot of people get nervous, get worried, get whatever. And I know the nature of the space. There's going to be a lot more traders in here, so maybe this doesn't necessarily pertain to you. But I pinned this up at the top. You know, if you're a long-term investor like myself, has a 5-10 year plus time horizon. Short-term markets dips, you know, when nothing changes and it's really just broad-based market selling, you should be inviting in the long term. When you have cash on the sideline, you get the opportunity to buy in at lower points, and you know you just want to make sure you're not going all in at the first sign of a dip. That's not what buying the dip means. To me, buying the dip means slowly buying over time, dollar cost averaging into great companies that I want to hold for the next 5 to 10 years. And you know, when it looks the bleakest, when prices are down, whenever, you know, whatever is going on, for the companies that are going to strive through it on the other end of it, that tends to be the best time to buy. You know, you don't want to go buy. Sometimes it works, you know, for playing on momentum and trends and buying stocks at all-time highs and whatever. But, you know, when you're in this game for the long term, you don't necessarily care what happens with a stock over the next 2 to 3 years. You know, you obviously have to constantly reaffirm that your thesis is still there, intact, and as strong as it was when you first started. But, you know, if nothing fundamentally changes, you should get excited by the stock price getting lower. You know, that does come with good fundamentals and always having cash, dry powder on the sidelines so you can capitalize on opportunities. But yeah, long-term investors should be welcoming stock market pullbacks, broad-based selling based on macro conditions or whatever it is. And as long as your fundamental theses are strong and intact, you should be as strong as ever in those. But I know the way we do spaces, it's going to tend to a lot be much more of traders and everything like that. But if there are any fellow long-term investors in the audience, I just wanted to make sure you guys heard that today. Gav, though, I'd be down to kind of roll through a couple more individual tickers. I know we touched through a couple at Richard earlier, but I don't think we did that too much today.
Yeah, we didn't throw out too many individual tickers.
Yep.
A lot of downtrends. Yeah, Matt, let's throw some over at you.
Yeah.
You know,
I actually
first off,
I found a good one, by the way, of all the sea of red. I found something that actually looks pretty good today.
is
It's
it
not
SARK?
looking good yet, but
I'm just kidding.
Caterpillar actually is the only thing I've found in like my search today that actually has bullish structure. 220 support. Caterpillar is still very strong all the way down to 210. There's a lot of strong bullish positions there that came from that big run up we had on Tuesday, and those supports are still holding on. So that's my one good stock I found in the sea of them. So for the bull side, but 220, I probably would wait, obviously not chase anything out. The rest of the market pulls down a little lower, but throw me a ticker. Let's
Matt,
see what we
I'll steal the first one from Gav. Give me LMT, Lockheed Martin.
Lockheed Martin, let's go. I'm looking at this guy here. Nice run up today. It has let me pull up this here. Thinkorswim has been crashing all morning. I don't know if that's just me or does that happen to everybody when volatility gets crazy?
No, that's why you moved to IBKR, right? IBKR, last 4 years, they have been down one day. One day.
I'm moving to TradeStation, actually.
I always experience that when volatility happens, to be honest, especially with Merrill Edge. Like for my clients, whatever the reason, when there's volatility in the market, like the platform just doesn't do well. I guess everyone's selling.
Like they have to get like the intern to go in there and like unplug the computers and plug it back in because everything crashes. So
did you try turning it on and off again?
Yeah.
No, just put that in right. It should be good.
Yeah. Oh man. Okay, so Lockheed Martin, by the way, that's actually not that bad of a play. It looks really good. This nice burst up, 362.5 is a key break point on this one, at least per my algo. Anytime you break through these, what we call monthly hedge treasury, which is the large institutional positions that hold for at least a month at a time, that's the hedging against the short side of the options. So the dealers, 362.5 is a key pivot. If that holds, that is a breakout to a bull side for a longer term, at least going forward. Anything below 360 is that kind of key break point to the downside. So if you're looking at, again, not investment advice, of course, these are only opinions, but that's a great call, Evan. I think LMT is very solid, very strong. And the fact that it broke 362.5 pre-market and is just kind of sustainably holding it at 365, not terribly bad. So like if I was longing that, I would probably personally grab some calls, maybe 370s when it pulls back to 62.5, get some cheaper delta on that guy, or cheaper premiums from a lower delta on those guys. And then obviously, if I was long the stock, I would have puts at 360 for at least a week or two out. Next.
Yeah, Evan, popping on that also real quick before I come back to the next name. Sarge, I saw you came up.
Oh, he must have oh, no, I see him. Never mind. And you're all good with the next name. But Sarge, you up here?
Yeah, I'm unclogged there. Okay. Just a couple of things to point out on Lockheed Martin because I'm long the name and I'm trading the name. It's coming off of a double bottom, all right, with a 348 pivot. My target price is between 415 and 420 right now. As Matt was mentioning, the 360, 363 area, I think he was talking about. 364 is actually the 200-day SMA. And retaking that level is a really huge deal on institutional trading desks. This is where risk managers and portfolio managers tend to fight over whether they stay in or add to or reduce exposure to different positions. So whenever a stock crosses the 200-day SMA, it's a really big deal. So we could actually get a couple of maybe mutual funds or hedge funds adding to their positions if it can hold this and close above 364 today, just as the NASDAQ right now on a broader scale is fighting with that 200-day moving average. That if the NASDAQ closes below the 200, I think we all should probably reduce our positions a little bit, our long positions.
Awesome. Thank you, Sarge. Okay. Okay, so Matt, let me throw a couple back to you, and then I'll go to KP for a couple of minutes.
Yeah, sure.
Just to hear some thoughts. Okay, so
I'll post a chart on Lockheed in a second.
Here we go. So I saw this one. New York legalized sports betting this weekend. So, and a lot of money came in, right off the bat. This is for mobile, and so there were some people that were thinking, like some of the ones that did get approved, which I think DraftKings was one of the ones that got approved. could have a big Monday. They were right. It could have a big Monday, just in the wrong direction, down 8.7%.
Yeah, it had a big Monday, but just on the downside.
Yeah. So just wanted to maybe get your thoughts on DKNG, and then we could throw a couple other out there. I see Evan. You want to go first on that?
He's
Evan.
buying more
Sorry, I had
AMC.
to get back.
Oh
Sorry,
yeah.
I had to get back and unmute. Not buying AMC, but so I am from New York, and I'm kind of taking this from the first-hand perspective. I was able to sports bet this for the first time over this weekend, and right off the start, they're really trying to get you to download all the apps. Caesars had the best promotion. There was 4 that were approved: Caesars, DraftKings, FanDuel, and BetRivers. I have not really seen anyone talk about BetRivers, so I haven't seen much on that one. I know Caesars definitely had the best deal to give out. They were giving out $300 just in free credit or whatever, and then a matching bid of up to $3,000. So I know that was definitely bringing in a lot of people. DraftKings was just matching, and then FanDuel was giving out a free $50 with a bunch of free bets in there. The number is definitely going to be really high on total bets, but these companies are definitely just shilling out, trying to get you onto their platforms right now. They're not going to make any profit this first little bit, but we'll see going forward. My hunch is that DraftKings might underperform a little bit in the New York launch, but we shall see. I found myself confused using the platforms, honestly. I'm not a super sports betting person. I had to have people explain it to me, but FanDuel and Caesars were definitely a little bit easier to get going on than DraftKings.
Levels on DraftKings not good. I mean, everything I agree with it. Fundamentally being a good investment. Targets. It's been, at least for the last month. I've watched it a lot because some of my friends really like it. And people have been kind of waiting for like a good spot to jump in and hold it. It's just been bleeding for a while. It's still bleeding. There are no bulls in my positional analysis. I'm looking. There's no bulls anywhere above 22.50. I can't find any bull positions that are in this that are showing me anybody out there is holding this in support. And 30 is such a solid resistance on this guy. It's got weeks, if not months, of still downtrending. I can't see a support in this at all. 2 strike. And for me, when you have these clear bearish trends on something, I need to wait for the confidence to push bullish before I go. And so this guy would have to break 30 before I even wet my beak in it whatsoever. I wouldn't be picking bottoms fundamentally in this environment where we're dealing with massive overall index collapsing. Anything that I want to buy needs to bounce or break through bull supports or break through bull areas, and stuff like this are just damaged goods to me as far as an investment for now. The timing is not good for me. Yeah. So 22.5 and still no support. So it could fall that far, I think, today or tomorrow.
Hey, and if you're feeling sad on a red day, just remember, Stool President once was quoted saying, "Stocks always go up." So you're not missing out. Okay. Well, that was a pen joke.
Didn't he put a bunch of Scrabble tiles in a bag and pull out 3 at a time and then just like long the stock and then say it goes up?
Yeah, he probably did. Okay, so we have a lot going on here right now. We got Peter Tuchman just joined, so we want to get through actually one more stock over to Matt. Then we're actually going to do Peter, sorry, KP, and then we'll come back to KP just because we did have Peter planned. So one more over to you, Matt, and then we'll go over. So SE, very popular stock that has basically given up all its gains over the past year, is now down 14% after being up at one point almost 70%, 75%. Into the 360s, down to 177. A lot of people like this from a fundamental perspective. It's got 3 major arms of business. What's going on with SE right here?
SE actually has not. It's back for the last couple of days. It's shown some signs of support. Being below 210 though, 210 is clear resistance. Kind of that hedging pivot at 180 is what we were looking for, and obviously for any kind of support. Losing that right now at the open, this close to the open of the day, is a clear run into a potential gamma squeeze to the downside. It's just similar to DraftKings. It needs to break through basically 220 for me to see any massive, I guess, bullish support going forward, which is going to be very hard. 220 would be filling in clearly that gap that we had from Tuesday, from that big sell-off. It's clearish bear territory. Anything below 210 is bearish on this, according to my algo. And then breaking 180 is breaking through what we call monthly hedge pressure, which is just based solely on the options that expire on the 21st. These monthly options held by these long institutional positions that are holding through the month, that's their puts. And so if we get a gamma squeeze below 180, then the sellers of those puts will chase in the shorting the underlying, because when they get exercised on, they have to be able to cover to buy from the sellers that sell on the puts. So losing 180, not good for this, and not good through the 21st if we lose that. So it could be 2 or 3 more legs down, unfortunately.
Okay, thank you, Matt. Okay, so we made our way through a bunch of different technical analysis segments. We've heard from a few different speakers in a couple of areas of, strength in the market, a lot of areas of weakness in the market. We've talked about some hedging, but it's come time to talk about macroeconomics and the environment and what is causing this. And for that, we bring in our expert, our resident NYSE member, and that is Peter Toffman. Thank you for coming.
Thanks for having me. I'm honored to be in this group. What an amazing group of characters. It's fantastic. I love seeing it. You know what? The sense of sort of anxiety and despair and adrenaline in your voice, Gav, is exciting to me. It shows, it mimics sort of where I'm at. I have to admit, me, net, I'm a bullish character in the long run, and I think the market has support, and I think it's too big to fail, and all that crap. But to be perfectly honest, when the S&P opens down 90 handles this morning, and you see some of these stocks hitting, 52-week lows and whatnot, I will say one thing: the market has gotten my attention. Okay. Look, we have to realize where we just came from, right? We saw this way back in on February 12th, 2020, which was the record high across the board on all indices before COVID hit the world. We had plenty of room for the market to go down 10,000 points and still not be really eviscerated, even though that the crash, or whatever you want to call it, the sell-off of those 6 weeks from February 12th to March 23rd were so significant. The market has gotten my attention. It's curious. I spoke about it a little bit last week. I think the market can handle, one bit of news at a time. It's handled the Fed. It's handled the taper. It's handled the inflation story, the supply chain story. When the market gets hit with one story at a time, it sort of handles it, and it's been bouncing back. But I have to admit that it's gotten my attention. We have a couple of days. Look, one day does not make a market. 2 days does not make a market, and a week doesn't make a market. We saw it happen in September, I think, which was the last sort of follow-through sell-off that I would say this mimics that we've seen over the last 4 months. I think the divergence between where the market was a couple of days ago, which was trading at record highs. Let's think about it. It's amazing to look at perspective. I've been around a little bit longer than some of you guys. My friend Stephen Guilfoy's on this call. He's been around as long as I have. We've seen a lot of movies, right? We've seen a lot of stuff on the floor in the investment community and the markets over the years of bulls and bears, and apparently now some kangaroos. But I think it's important to note that it's just fascinating. I'm watching it. I'm listening to you guys talk. It's where some of the tech sector has got. Look, let's go back to this for a second. 2 or 3 days ago, we were trading at record highs. Now we've got 2 days where the markets really kind of feels a bit broken, right? And I think it's more important. I know I'm a big fan of the Dow, although it's not a significant indices in any respect as it was way back in the day. I'm a big tracker of the S&P 500, and 90 handles on the S&P has to be paid attention to, right? And you see the divergence even a couple of days ago when we closed at record highs. We had multiple days of record highs. I mean, it was fascinating to see the number of record highs we had in 2021. I think there were 70 of them in the S&P 500, right? So we've been butting our head up against high highs across the board for the last 12 months for sure. But still, last week, couple of record high days across the board. And still, you saw so many of these stocks that you guys talk about every week, and I know a lot of you have positions in them, a lot of the tech sector, the Affirms, the UPSTs, the Snowflakes and whatnot, whether it's even Tesla and Moderna and you're seeing stocks. If you look at the graph, and I look at them every morning on some of these names that have been the flavor of the moment for 2021, the graph just looks broken, right? I mean, it is a one, if you were in Vail, Colorado skiing, it would be a black diamond downward ski trail for sure. And, obviously technical analysis is something the gentleman before was talking about, our buddy Matt. But I think that is your last defense against this kind of volatility. If you guys are looking for entry points into investments, surely this volatility is an absolute gift for those who are trading. Like, we got to differentiate investing and day trading. Historically, you know what? These are more, as we've seen over the last 100 years, days like we've seen the last couple where you've got down 90 points in the S&P 500 are better buying opportunities than selling opportunities for sure. But, technical analysis is defense against this kind of volatility. Some of these moves in these stocks, we saw it. If you want to go into the meme world the other day, I mean, on Thursday night, we have a course called Wall Street Global Trading Academy. On Thursday nights, we do live Q&As with the students. And after hours on Thursday was the night that the GameStop announced their inroads into crypto and NFTs. And the stock had, closed in the 130s, and it went up to $176 at 5:30 in the afternoon. This massive spike on volume. I analyzed it. 90% of the people paid above 170 for it, and it was one of those going to the moon experiences. And look at where it's trading today in the 120. So the market is volatile. The market is dangerous. The market is worth paying attention to. Do I foresee a lot more downside? I don't know. I think it would be irresponsible for me to tell you guys I have any idea where this market is going. Are we getting wrapped up in Omicron here and the global effect of that? Obviously, thank God nobody's dying, but it's surely shutting shit down. Excuse my language. I mean, there's no question when you have 1 million people in the United States getting COVID, and maybe a lot of them haven't even announced it because they're doing home tests. And you have, I went to go to my bank the other day, and the bank closed because there was not one employee who did not have COVID. And you're going to see that happen across the board. And that's going to eventually have an effect, right, on everything. Is it that? Is it the fact that Jay Powell, may not get confirmation midweek this week? I don't know. And people were afraid that there'll be a change of posture in the Fed. Is the tech sector broken? Is the supply chain thing happening? Is inflation here to stay? There's so many moving parts. I'm a student of this market. So I'm here to just kind of wonder and pay attention.
I appreciate you, Peter. Thank you for keeping us nice and level. Just following up on that, this week, are there any catalysts, any world events, any news, anything that you're looking out for that may move this market in one direction or the other?
I look every day. The press is unbelievable. The media really tends to hound on these things. I'm really drawn back to that day when CNBC had Ackman on, and he talked about the end of the world, and they actually, their chatter and they're pounding the pavement of what was going on just in the beginning of COVID actually set the market into a circuit breaker. Whatever story they tend to focus on is going to be the flavor of the moment. There are a lot of moving parts in this market, and they love to just grab a hold of one of them and run with it. 2 days ago, we were at record highs, and today the market's coming to an end and stocks are broken and we don't see a bottom and la, la, la. So, I think the confirmation hearing of Jay Powell could be significant. I'm a small player in this game, guys. You've got a lot of major guys who are flinging around huge sums of money. You've got the beginning of the year here, fresh money coming into hedge funds. It was fascinating to look at the chart on how hedge funds did relative to the S&P 500, and there weren't that many that beat it, for sure. Are we seeing liquidation of positions? Are we seeing a rotation out of tech into some other names? I mean, what are we seeing here that is, I think you have to realize that there's been so much froth on the upside in so many of these names that when the big players decide to get out of their positions, they are friggin' hitting a button and getting out, right? The way we see the momentum on the downside when these stocks start to go south is so aggressive. It is clearly somebody just getting out of a stock in a big way. And then you've got algos and you've got the other stuff. So I'm just going to watch the market a day at a time here. I don't know whether they ran the story so much about Omicron and stuff over the weekend that the market came in with the jitters. or the breakdown that we had Thursday and Friday of tech was sort of the beginning of a little bit of a further sell-off. It's odd, in my opinion, to see this much breakdown in the first week of the year when you've got a huge influx of cash coming in. I know from my perspective, we've seen rather large numbers, and Stephen Guilfoyle will be able to identify what I'm talking about. You guys know that I trade the openings of the market and the market on close, which is really the flow, the institutional flow coming into the New York Stock Exchange. And the numbers have been big. So people are getting into stocks in a big way, and people are getting out of stocks in a big way. So I'm just watching. I'm paying attention.
Awesome. Thank you, Peter. Evan, anything you want to throw at Peter?
I don't really have too much top of mind right now. I do have a couple questions in there, Wolf, but I think if you had anything top of mind, definitely would be better.
No, I think that, he touched on everything that I was looking at. It definitely is, concerning that there's been this large influx, of capital, like you talked about. We moved into the new year, right? It's not like people are trying to protect their books. It's not like they're, necessarily tax loss harvesting at this point, things along those lines. It's just, we're just looking at, like Peter said, people just hitting the buy button. And I think honestly what they're doing in a lot of these cases is, they're not waiting for the green day, right? I think that in the past that sometimes, you kind of saw that there's movement where people would wait, they get the green day, rebounds a few percent. Now they're just taking it right off the cuff. They're seeing, red, and they're seeing a breakthrough, I guess, key levels of support. And obviously a lot of it's algorithm trading as well. But yeah, I mean, just watching it continue to fall. I'm just on WSJ right now, just looking through, seeing if they're, anything that they're throwing out there. I guess that they're still talking about stuff that the Fed's going to be doing. Oh, look, I was trying to see if you made the picture today on the WSJ, Peter. I don't see you.
Look, I'm the bullish sentiment. I'm not the bearish one. I'd rather not get my face out there thinking this is a buy opportunity right now. It may not be, but we don't know where the market's going to end today. I kind of think, the research I've done over the last week, and this is the last of what I'll say, is that maybe we are underestimating the effect of raising interest rates and the taper is going to have on the market, right? And the market being the people who are the bigger players in the game, right? Are people way smarter than me, who are big hedge funds, big institutions, positioning themselves for the taper and for an interest rate raise, and they're getting out of a lot of stuff and they're getting into new stuff. I kind of think that could be what's looming here.
Sarge, do you want to add anything onto what Peter's been saying? He was there for a minute.
Sarge, you there?
Busy writing.
Can you guys hear me?
Yeah, we
can hear you
now. As far as I think the market can handle interest rate hikes, and I think the market handled the tapering. It's going to be the contraction of the monetary base. It's going to be the contraction of the balance sheet that matters. That actually removes liquidity from the economy, and I think that's what spooked the markets last Wednesday. I think that's Goldman talking about that again over the weekend. I think spooked the markets this morning. Although Goldman has it in July, I think they might even go sooner than that. That's something we haven't dealt with in a very long time, and I don't know. We're coming off a $9 trillion balance sheet. I think they probably have it in their heads to get down to 4 or 5. That's a long way to go. I don't think they're going to get there before they have to reverse course. But I think they are going to give it the old college try. And I think that's what has Wall Street rattled right now.
So what moves are you making, Sarge?
I went a little more into staples the last couple of days. I'm still in all the tech names I've talked about, but I've more than halved most of those positions just because I basically had to. And then I moved into Pepsi. I moved back into CVS, old Sarge faves. I took profits earlier in the year. I moved back into names like this because they're moving less quickly. So, I mean, I'm still in aerospace. Thank goodness I've been in. That's not up to date, except for I think Lockheed and Northrop, but it's been good all year, the 5 or 6 days that we've had so far. The banks have been positive. Wells Fargo has been a gift. But then again, we probably want to take some profits on those before we get to Friday, because when we get to Friday, the traders who are in those names are probably going to take profits. So you want to be about 1 day ahead of them, or at least I'm going to be 1 day ahead of them. You don't have to do anything. And Disney and Viacom. Viacom's been great because they're probably going to sell the CW, and there's a lot of speculation over takeover talk. And Disney's down today, but it had been up last week. So those are my entertainment plays. That's about it, I guess. I'm still in the AMD and NVIDIA, and taking it on the nose. Marvell, I reduced my Marvell technology. I haven't gone back into memory yet. I missed that move. And that's about it.
I got to take a look at MRVL. It's been a minute since I've looked at it. I was trading calls on it a bit, but oh wow, they came down.
Yeah, it reached 79. I think I'm not looking at my screen right now, but I think the gap goes down to about 72. So you got a little bit of vacuum here in Marble. If you could, now that it hit 79, I think it could go to 72. That's where I would try to buy back the portion that I sold earlier.
Yep, I played calls on that in the 60s, but then missed that gap, unfortunately. Okay, so KP's been chilling up here. I want to get him involved. If you're not already following Peter, amazing follow. Does work at the New York Stock Exchange, is extremely familiar with everything that's going on. Verified on Instagram, a lot of good stuff, and obviously has his own academy, Wall Street Global Trading Academy, who has been doing a lot of different workshops in order to help people get through this. So really good stuff going on there. Okay, let's go, and I'm just going to ask a couple of speakers to keep it to just a few minutes each, just so we can keep it revolving. But Botad, KP Charts, would love to get you involved and hear your thoughts on the market.
All right, I'm going to harp on Peter's sentiment on technical analysis. It's not going to give you a perfect solution, but definitely would have given you some clues to what's going on in the market right now. If you look at volatility, basically since the Wednesday before Thanksgiving, okay, the VIX was showing elevated levels since then. It's been a chop fest since that point forward. Now, if you look at growth in value, right, among your small caps, your mid caps, and large caps. Mid caps were signaling the shift of value back in the beginning of November. Large caps were signaling that change about mid-November, okay? And then small caps, as of late, they've shifted over around the 27th of December. Now, when all three of those are shifting to value over growth, along with your defensive sectors, like Stephen was talking about, the consumer staples, right? You take a look at XLP over SPY, XLU with utilities. These are all shifts in rotation. Now, we had multiple shifts of rotation of sectors throughout the past year and a half, 2 years. However, there were some incomplete rotational shifts, whether it be in materials, healthcare, a variety of other sectors. The 10-year is one thing a lot of the when it comes to institutions, they pay attention obviously to certain price levels or certain levels on the 10-year. It's above, I think, 1.8 right now. You also have Powell is speaking, I believe, tomorrow. You asked a question on the calendar. You have core CPI on Wednesday. You have retail sales also this week. You have your Baker Hughes rig count on Friday. So you do have some market news this week. You obviously have your financials when it comes to JP Morgan, Wells Fargo, Citigroup, along with BlackRock that are reporting on Friday. So you do see that we have a busy week this week, but I think Powell speaking tomorrow, obviously eyes are going to be glued on that. But on the TA side of things, this is a choppy market still. I don't think that's going to go away. I think a lot of people, when it comes to the technical analysis world, have been stating this for a while. It is a scalper's market. This market to try to time market bottoms. I've said this to people and they think it's a joke. Timing market bottoms and market tops, it's a very tricky game. Okay, and when you have the loss of usual volume overall, you're really playing a dangerous game. But that's it.
Any names specifically standing out to you today?
I would go with some defensive names here. Okay, Peter mentioned some of this as well when it came to using TA. So I definitely like Intel. Actually, Intel's been beaten down for a while. They have a good plan going forward. They did get business obviously as well from Qualcomm. Their CEO is just on Bloomberg over the past few days, stating their relationship with Qualcomm, meaning Qualcomm CEO. I see Intel as a good play right there because it's been beaten down as bad as it has. E-commerce, I believe you mentioned even SEC Limited. That is a definite name to pay attention to. You gotta like Apple and Microsoft. I mean, Microsoft, I know a lot of people are. I was shocked it broke through a price gap it had from the 27th of October at 312.4 to 316. It fell further below 310 and went down to 307. I haven't seen the current price right now. Apple as well. I think both of those companies, the fact being that Apple obviously is also getting into manufacturing their own modem chipsets. They had bought Intel's modem business a few years ago. That gives them cost saving as well, on top of the $5 billion they roughly save per year manufacturing or designing their own chips, still being manufactured by TSM. So I like some of the FANG names, but more Apple and Microsoft.
Awesome. Yeah, definitely keeping my eyes on those. We've heard kind of some opinions both ways on these large caps.
Yeah.
So it's pretty interesting. Right now, I'm still holding Apple shares. I think a lot of us probably are. It's one of my larger gains. Not in too many other the large caps. I mostly trade in and out of them with the scalps, kind of like you were talking about.
And if you think about it, Apple and Microsoft together, they make basically like 13% of the S&P 500. Okay.
Yeah, it's pretty nuts. And then
Yeah.
you throw in Google and whatever else, and you're kind of right there. Okay, awesome, KP. Thank you. Feel free to stick around. We might have some more back and forth. Okay, Miguel, you had messaged me. You had two more ideas you want to throw out there?
Yeah, I think you short Berkshire Hathaway here. I think a lot of people are long, and RSI is over 80, which is, or you sell, right, if you're long. And I'd go for a short Berkshire Hathaway here with a good risk return reward. Put a stop above 322. And then I've kind of mentioned it before. I kind of like gold this year. We're consolidating between this wedge pattern. It's called it a triangle, symmetrical triangle pattern. And if we start breaking above 1873 in gold, which will be interesting with the rates. I think we kind of knew that rates were going to increase or increasing this year. So I'm not sure how the impact on that will be. And maybe we'll just keep on consolidating here. But, the RSI in the monthly is around 54. And we got up to 84 in 2020 in the summer. And, we failed that previous high from 2011 and been consolidated. And then we held a key area, the 1681, which was a retracement level. And if we break out above 1830 on gold, I think we go back to all-time highs. And then I even had a further, I think we go to 2460 if we, break to the highs and out of the symmetrical triangle, which I don't think a lot of people are talking about. I think gold has been like, you don't really want to be in gold and you want to be in tech stocks. And I think that'll probably change this year. So, and, I'm going to launch a shirt because that's what I do. Like for Dogecoin, we launched a shirt on the top for SNL, when the SNLs get. And so we're launching a shirt this year for SX Trading, a gold shirt. So be on the lookout for that.
Perfect. Thank you, Miguel.
Appreciate it.
Gerg, bringing it back to you. You've been quiet for a little bit. Have you any thoughts on what we talked about over the last 30 minutes or any other things you wanted to bring to the forefront?
I was eating my breakfast, though. What did I miss?
Oh, yeah. No, well, you know what? If you're eating breakfast, probably not a whole ton. Some macro talk. Looks like some of the crypto market is pulling back up here. So Bitcoin has rebounded from the lows this morning where it broke below 40K and it's now back up near 42. So we are seeing a move upwards there. This is also corresponding slightly in Ethereum, which is, regained its $3,000 level, which is nice because I'm holding a good amount of ETH. And yeah, just looking at the rest, growth is kind of still all over the place. Tesla's coming back. It's looking like it's going to go
You don't
positive.
want that, right? You want all ARK stocks to be down till tomorrow at least.
I'm still up.
ARK's down 4% so far. Oh, ARK's bouncing back a bit so far. Yeah.
Yeah. ARK is. I think I'm gonna see what happens with these SARK calls. I might just take profit. They're up 20% right now from.
Set a stop loss, right? Set a stop loss as your cost. Let's see how they go.
What's the ticker you talking about that you're up on?
AMC.
SARK, it's just inverse ARK. ARKK.
Oh, you're short ARKK.
Yeah, pretty much. That's the way that's rolling. Okay. I think that all looks pretty good. Oh, also real quick, if anybody's up here, just wanted to let people know for today, the Bullish Rippers account that you see up here, it's the Green Raccoon account. You might not have heard it talk, but that is an important account to be checking out. There's going to be a lot of stuff going on, especially this week. We'll be doing spaces from that account. So today, actually, so Evan tweets from that account, and I am going to be doing spaces from it. So you'll kind of get a nice little like power punch duo there, and we're actually be doing a space on it during Power Hour today at 3:30 p.m. EST, and we're gonna have exclusive trading on that. We're gonna have Stock Talk Weekly. We're gonna have Brad Friedman, Stock Market Nerd. I think Catherine wanted to come on, but she's not feeling great today, Catherine Ross. So that'll be at 3:30 p.m. EST. So definitely a good account to be following is the Bullish Rippers account. And this is actually just the first of 4 spaces we have today. We have the SARK space with Gerg after that. And then I'm doing a 7 p.m. EST space tonight with TSDR and Danny Nas and a few others. That's going to be covering journaling your trades. So kind of like the mindset behind not just trading and then just leaving it all to the past, because the past is not, I think this was Evan that I heard say this. The past doesn't necessarily repeat, but it does rhyme. Something along those lines. So it's good to, have a good understanding of what's going on. Okay, just scanning through some DMs just to see what's going on. Everything looks pretty good. So we've been running now for 2 hours. We started at 9:20 a.m. EST, and it is now 11:21 a.m. EST. So with that being said, I think we've covered a majority of topics. And like I said, we are going to be doing hours and hours more of Twitter Spaces today. I'm happy to throw a couple more names out there if that's what people want. We can do a little bit of analysis. We can do a little bit more macro. Evan, is there a specific direction that you want it to go?
I am totally down to do a tiny bit more macro if there is, if we have that. Maybe talk a little bit more. I know there's a little bit of Fed talk coming this week, so maybe talking a little bit more about that with the people we have up here. And I'd be down to go into throw a little tickers out there if you put out a tweet, and we can get maybe some ones from the crowd, and then I think wrap up after that. But I think that sounds like a good extra 20, 25 minutes of the spaces.
Yeah, sure. Let me drop. What tickers would you like us to analyze on our space right now?
AMC?
Yes, AMC to
And Lucid,
$1 million per share.
Even Lucid, I think.
Okay, I just put that out. If anybody has a ticker, please drop that. Give me some inspiration. If you see something good, maybe it'll come up on our timeline and we'll discover it. Also, you said you did want to do a bit more macro. I think, Peter, I think it'd be important for people, and you could probably explain this really well, why interest rates going up is causing this massive decline in growth stocks, which is obviously, dependent upon this free cash flow forecast that people are doing. So maybe if you want to just explain that to people, why it's having this huge hit.
You know what, Wolfie? I'm sorry. I actually have to run. I got to go back down to work. So
all good.
I can't. You know what? There are probably people on this call who are more adept at this, and I don't want to really rush the answer to it. I just wanted to just throw out the fact that, and I appreciate who was it who was talking? It was just he's gone now. Anyway, you know what, guys? This is an amazing opportunity to scalp the market, if you use that term. I don't usually like that term, but at this point, I think the market can be. Don't look at your long term. Oh, there it is. Yeah, bow. What's up there? It's a scalping market. Right now, for a kind of a day like today, look at your long-term investments. I imagine some of you are feeling a little bit of pain, but the opportunities on a daily right now to make money while the amateurs are out there, buying stocks on hype and on FOMO, and then watching some of these guys get out of positions and finding some wonderful technical spots on the upside and the downside. We watch RSI moving averages and pivot points. And, we're seeing, although last week we had a day that was a little bit painful in Rivian, there were like 4, we got into the stock 4 times, 3 of them were losers. The technical opportunities in a market like this, we may end up closing down only 300 or 400 today. It's not where a market opens or where it closes. We've seen this kind of volatility before, and we've seen reversals, unheard of reversals, and we will probably see a number of them this week. But from a technical point of view, this is an absolute gift. This volatility, this capitulation in some of these names are incredible opportunities. But if you follow the rules, you've really got to follow the rules, using risk management, using stop orders, because it can be so painful. You can go out to get a coffee, be long a stock using a mental stop, which I think is insane. The stock market gives us one of these incredible opportunities to have stop orders in stocks. If the stock's not going the way you're supposed to, hope is surely not a strategy. Get out. There's going to be a million other opportunities. Anyway, Wolfie and team, I love you all. I got to run to work. Let's talk soon.
Awesome. Thank you so much, Peter. Really, really good having you on, and looking forward to our next chat. Okay. People are dropping some tickers. I see them coming in. Let me go ahead, actually. It's
Yo,
my
Ethereum
last
is
tweet.
bouncing back now. Even Bitcoin is off 5%. Ethereum up 5%.
You're saying from lows?
Yep. In the last
Yeah.
hour.
Yep. Everything's kind of moving. Okay. So let me get
I just
out of
looked
some of
up
these.
AMC. I just made a post about it, and I said I can't even believe I'm saying this. AMC is actually one of the better looking tickers today of all things. 21 to probably 24. It's looking like it's basing pretty hard, and it's got a little tiny bit of upside, but obviously it's plunged to zero. In my opinion, it's inevitable. But at least for the
No,
short
I
term,
think zero's a bit too high. Don't you think?
Hey,
I think all the
I-
investors should be paying $5 to own the crap. So AMC goes to -5. You own a liability with AMC.
That's awesome.
Cool. I am out of SARK. I don't want to get caught on a rebound into the latter part of the day. Take profit. I don't care if you're in the audience and you have 5%, 10% profit right now. Like, take some profit. There is just nothing wrong with that. You can always get back in, right? If these things fall, you can get back in, have another hedge. You don't have to day trade. You can swing things, but like, take the little gains. It's going to help in the long term. And you'll be really annoyed if you were up 5-10% and then you're down like 30, 40, 50%. That is going to be the worst. Okay. I pinned that tweet up to the top of the space asking people for tickers that they would like us to analyze. Matt, you could probably take a look into that if you want to get a head start on some of these, but I'll drop them around and I'll get some thoughts on what's going on. And Sarge, actually, before we go into that, is there anything else that you wanted to weigh in on?
Well, I just thought I could help you out, guys, out the macro question that Peter had to run on. Just know that inflation data coming out this week, right? You got CPI and PPI. Now, we're a little afraid of a 7 handle on headline CPI. We're a little afraid of a 10 handle on headline PPI. Then on Friday, with the bank earnings, we also got retail sales and industrial production. What the market's kind of afraid of right now is really, really fast inflation, really hot inflation with really cool macro data on Friday, which would indicate that the Fed would be forced to tighten policy into a weakening economy in December, which would carry over because the Omicron is still going into January and probably February. So right now, that's the overriding fear. Aside from everything else we talked about, that's something else that economists are looking at, that the Fed may have to tighten policy and withdraw liquidity as we go into a more difficult economy. Just one more thing to think of. One more reason to be a little more defensive right now.
Yeah, that makes sense. And then one of the things that I was kind of hitting on that I was throwing over to Peter, for anyone that's looking at some of these growth stocks, if you're unfamiliar with doing a DCF, a discounted cash flow model, that is completely fine. I don't expect most people on Twitter to understand or have done, had practice with them, especially if you didn't take finance classes. But essentially, you're looking at a model that most growth stocks are using, where they are projecting out future cash flows as well as future costs. And then they're sometimes going, whatever it is, 10, I see between 5 to 10 years usually, but some go farther out. And then what they do is they take those future cash flows that they're making and they do discounting. They discount them back to today to figure out basically what the value of the company should be today. And a large part of that process involves your interest rates there, right? So that is what's basically your denominator is decided by a discount, by an interest rate. And as the interest rate goes up, since it is in the denominator, you're going to see a lower overall future cash flow projection. So that is going to lower the price of your stock. So it makes a huge difference because think about if a company is doing this, 10 years out and the interest rates move up even 0.5% or 0.25%, whatever it is, you're going to severely lower the justification that they can make for the growth of the company. And not just them, but obviously these large-scale investors who are doing these ETFs on a daily, weekly basis, whatever it is, whenever they have updates that they can put into them, trust me, ask any analyst what their models look like, and that is going to crumble. So when they got these announcements, hey, we're going to do multiple rate hikes, they had to build in, hey, we're not just cutting the valuation of this once, we're cutting it 2-3 times. And now they're staring at this model where beforehand, let's say X stock, they had a $100 value, and they're going, okay, but our $100 value is going to be cut to like 85, then 70, then 60. And the stock right now is trading at, 90 or 80. We're not willing to take those losses. We're just going to get out now because it just doesn't fit our valuation. And obviously, if it's broken through support levels, you can kind of mix in both of those. So that is just a little bit of econ or finance 301, whatever college you went to, whatever they call that class. That is like the very, very summarized version of what is happening when interest rates move up for discounted cash flow. Okay, with that being said, let's dole out some of these names. I see we already got 14 comments on this. So Matt, I'll drop 2 to you, and then we can drop a couple to KP. Or KP, if you actually want to take a look at that thread, you can also pick some out. All right, Matt, here's actually one that's doing pretty good for me, but I think has recently had a pullback, and that is IIPR. So I think that one is I'm pretty sure it's an ETF. It's a real estate investment trust. That's one I bought a while back. So even though it's had recently a pullback, still doing pretty good on it. So IIPR, and then the second one I'll give you will be, let's see what people want. Well, I know you talk more in AMC since you were liking that chart.
Yeah, we actually IIPR, that's one of the ones, the way our software works. If I've never pulled it up before, our software has to learn about it and add it to the list for the next time. So that's one of the ones I've never looked at. So I don't have any commentary on that one, but I will check back in tomorrow. I was going through the list and run through it as quick as I could from the ones that were posted. Bank of America, I just shared with the space, as financials have been some of the stronger trades in, I guess, or the financial sector has been one of the stronger of the sectors in the S&P. Bank of America and others, Morgan Stanley, Goldman, some of the ones I've been looking at there were kind of my stronger plays. They're, as far as the support goes, things are probably going to follow the rest of the market. If the market creates this volatility event that we've started, and I guess I can go into further macro later, it could also pull everything down further. So I'm not trusting a lot of what I'm seeing. There's key levels, these hedge pressures that we calculate. Anytime you break them, I have rules that don't enter a new position until you break above them. 49 is a key pivot for sell programs to be more active than long programs that are auto hedging or auto accumulating a position for exercised options. So, or potential exercise options. So 49, losing that level is a no entry level, even though there is support. So financials will likely be sandwiched today. If the S&P takes a leg lower, I'm expecting SPY to hold 57. Bank of America and others might trade one smaller leg down, but not too far below. So I think 49 to 48 sandwich today, but it also leaves it open for possible continual selling for another couple of days. And AMC, which, jokes aside, I know we always make fun of that popcorn company, but at the end of the day, I think AMC actually showing a little bit of good signs. And it's weird because there's this effect that we saw last January when it comes to what happens with the GameStop, AMC, and meme stock thing on the entire index. Remember when we saw, I think it was January 25th, when GameStop had that huge run up, right? The very next day, the S&P crashed out for a whole day. And I think it's very interesting to understand why that happens, right? If you have some kind of, Melvin Capitals in the news, they get squeezed really hard, right? Well, they get squeezed hard on GameStop, but they get squeezed really hard in general. So they might be long other things and short GameStop. If they get margin calls, and get a capital infusion because of their GameStop short, then they're margin called on their entire portfolio and they got to sell other things. And maybe market makers know that and they drop the bid and ask, or they drop the ask price, or sorry, the bid price to catch the sell of the other things. So GameStop rallied really high, S&P literally crashed the next day. And you've seen this zigzag effect where the entire market goes up and the meme stocks come down, or the meme stocks go up and market comes down, like next day activity. So a lot of these big positions, I think a lot of people are playing this zigzag because you're getting squeezed in one area, and then when you're trying to fight that off, the very next day you're blindsided in the other area, or you're liquidating something else to raise cash to support the position you're in upside down. So AMC and the meme stocks kind of finding support today likely has to do with the fact that everything else is selling, right? People are liquidating positions in general, so shorts will be covering an AMC since it's very heavily shorted stock, just like the longs and the rest of the market are covering or selling their positions as well. So AMC does actually have bull support at 20. It's got hedging support and monthly hedging support at 21. So those levels are very key in holding at least strong for today. But there's clear resistance at 24. So this thing isn't a to the moon stock. This is a 224 to level 24 stock. So maybe it's just a phoenix, maybe not the moon. But little small play on that maybe. Like I say, I don't trade the meme stocks. I'll just report on them. If you guys ever want levels for AMC, hit me up. I can throw out those levels every single day because I know it's one of the popular stocks out there. But yeah, those are my numbers for those guys. If anything else, let me know.
Very cool, Matt. Thank you. Okay, we actually had a couple of other speakers who I was pretty excited to see that came up and joined us. It's been a while since we've actually chatted, Rihard. So very great to get you back on. I just wanted to, I saw you in the crowd, and I respect, your investment style and approach, and just wanted to hear from you, going into 2022, what your approach is, how you're going after this market. I know that I think you're a bit more long-term investor. So yeah, just saw you came up, wanted to hear from you.
Yeah, thanks for inviting me. Yeah, I'm definitely not a trader. I'm a long-term investor, but the market is definitely interesting. Also for long-term investors, especially in the growth or technology sector, because like you're seeing, like what I'm seeing, like since the Fed minutes came out this year, there's this notion and people are afraid of Fed accelerated taper, Fed hikes, and now even a Fed balance sheet reduction in the same, let's say, period happening, right? And this is causing this sell-off, especially in growth stocks, that is continuing to fall. But how I see it is like, I don't think the Fed will go that aggressive. Like people are afraid of 2018, where this exact same thing happened. With like we also had Jerome Powell as Fed chairman. So I don't think like if you go back and look at the same period, like after that aggressive Fed in 2018, we actually had a period with where the Fed like pedaled back and even had rate reductions. So what I'm trying to say is that I don't think that Jerome will go this aggressive, and that the market is a bit too scared, in my opinion. But honestly, where I would be putting my money back in a bigger way is if I see CPI data that is not so hot, or if we see, and I think we will see, some kind of speak from Jerome where he says like, no, we're not gonna go that aggressive, etc., etc. So I'm waiting like to see this sign before I put like bigger amounts of capital back into the market.
Perfect. Would you be comfortable sharing what some of the larger positions are that you are holding through this?
Yeah, so right now, like my largest position is Facebook. The reason is I owned it for a long time. It's one of my long-term higher conviction plays. But even in this environment, it's like trading at this year's like 20 times PE. And even if we go into a aggressive Fed environment, I don't think the stock has much to fall, honestly. I think the indices can, but I think Facebook will do better than the rest of them. And then I'm also like, I'm starting to like more and more Square. Its gross profit to enterprise value is coming to the 2016 levels of growth stocks. So these are some of the positions I like, for example. Also Pinterest, like this name has been so hammered. And if we see an earnings from this name that will produce even a small surprise in terms of revenue or in terms of users, I think the stock is going to pop a lot. So let's say these three positions are the ones I'm keeping my eye closest.
Perfect. So, with Facebook, And with all these, with the long-term investing, you're not using like stop losses or anything. You're just kind of like, I'm in these, I'm going to be holding these for years, right? Like that's the approach. I know the fundamentals. That's the approach you're coming at it with, right?
Yeah. So like in terms of my view, only when a company is like overvalued in my parameters, I let it ride and I do a stop loss, trailing stop loss. So that's the only time I use a stop loss. Otherwise, if I'm like extremely negative, I reduce and go to cash, or maybe throw some hedges, like hedge with an arc or something like that. But I'm not like trading or setting active stop losses on a daily basis.
Awesome. And then last question, and I'll keep it rolling. Any macro perspective thoughts that you want to add? I think you were hanging out when we were kind of going through some of those.
Yeah, so like from a macro perspective, I think the second half of the year will be much better because I actually believe in this thesis that inflation will peak or has peaked in the first half of this year. And that's why I don't think that this, like we will have higher inflation for sure, like 4% or something like that, but I don't think it's going to last for 7-8% inflation year over year. And the main reason is because I still see this inflation being demand driven, from the supply shocks we're having, from different kind of, from logistics, etc. And we don't really see like consumer confidence. If the stock market is not going to perform well, it's also going to drop. So if we see a correction in indices, consumer sentiment is going to drop as well, because like 1/3 of consumer savings is in the stock market. So that's why I think the Fed going with hiking rate, etc., it's going to cause inflation to peak and commodity prices to peak. So I don't believe we will go into this really, really hyperinflation environment. That's why I'm really excited for the second half of the year, and we'll definitely look to deploy the capital in the first half in my long-term positions.
Awesome. Thank you so much. Appreciate that, Riard. Great follow. I like the contributions that you put out and the writings. I think that we've done, I think we did a podcast. I think, no, we chatted together in the past. So really, really good stuff. Appreciate you joining up today.
Yeah, thank you, guys.
Okay, awesome. Also, real quick, I don't think this space is going to crash, but I just got a notification about potential disconnection, but I don't think it's going to crash. So here's praying.
Everyone go short Twitter.
Yeah, if you went short, by the way, Greg, I don't know if you saw it tweeted this morning. If you went short Twitter when they banned the Nancy account, you would be up 17.5%. Just saying. If you went short Twitter when the day the new CEO started, you'd be in good hands. Okay.
No, if you shorted when Spaces came out, you'd get 40%.
I don't know about that. Well,
I mean, Spaces, right? They came out in late July, right? Late July.
No. Are you saying of 2020 or 2021?
2021.
No, come on, man. I was on Spaces in March.
Oh,
Spaces came out.
So March, you would be up 50%.
Out actually last December. Last December Spaces came out, not this past one. So they've been over a year out, and I started using them in March. Yeah.
So since March, Twitter is down 51%.
Yeah, but I actually only played the calls on it once. I played them in May, and I caught that run up when it dipped down into the 50s, and then I sold them at like 70.
So for me, right, I love Twitter. I love the platform. I spend most of my time here, but I would never own the stock. The stock's trash.
Really?
Yeah.
I disagree with you. I think it was social media plays during COVID were fantastic. And
you still own Twitter?
Yeah, why not?
Social media plays that make money, though, are better.
Sure, but I mean, an investment or trade that makes me money is great as well. And Twitter, it hit lows and it went all the way back to all-time highs. And now I wouldn't be shorting it here. I'd be taking profits. It's hitting the 61.8% retracement, from all-time lows. And yeah, I'd be taking a long position here, maybe even for a trade.
Now zoom out, all-time lows for $15, $14 back in 2016, 2015. So
I am zoomed out. I'm looking at the Fibonacci retracement, and we're hitting the 61.8% Fibonacci retracement from
yeah,
all
but you mentioned
time.
all-time low, right? Twitter hasn't even come close to that. Even if Twitter goes down another 50%, it still wouldn't be close to the all-time lows.
I mean, to me, if you bought on the COVID lows, I was talking about buying social media stocks because what are you going to be doing at home?
I mean, during the COVID
So,
lows, you could have bought any stock and made money, right? So,
I'm
like
sorry.
anyone with one IQ could have thrown a dart in any stock and doubled his money in March.
Yeah, look at me.
No, but there are stocks that outperform. I was talking about Snap and Etsy during the COVID lows because
Yeah, but
I
you didn't even mention Snap, right? You mentioned Twitter, so how's Snap coming right now?
what's that?
How did Snap come out? You were talking about Twitter, right? You're just moving to Snapchat now. And I
I
think
said
Twitter wasn't the outperformer in that sector too.
I was talking about social media plays during COVID. And if you look at Snap, I said you should buy it during
Yeah,
COVID.
Snap was a great trade. I think from $20 to $80, right? Or even higher.
Really?
83. Yep.
Yeah, I mean, I'm still long from COVID and Snap. So, I mean, I'd take that as a long-term investment any day.
I bought some Snap recently at 50, I think 48 or $50, but I'm still in.
Yeah, I would say $50. I mean, I'm not disagreeing with anything, but I mean, it's kind of one of those things that, you know, I don't know. I just don't see Snapchat as a revenue generator, to be honest, for longer term. I
No,
think
they do,
it's
right?
holding.
If you go on the platform,
Yeah.
I think the amount of ads are being seen on Snap is almost at 3x from last year.
But why should that matter to us as traders or investors? We should be caring more about price and what the stock is doing than, I mean, I guess you could look at the fundamentals, and I kind of agree with that. But to me, it's price, right? Everyone is holding, right? When you buy a stock or anyone else, we have a price that we're in at and a price that we're willing to get out at, right? And so, like, maybe I would be selling some Snap, right, if I was holding it long term, and it went against me on 1022, and it came down and gapped down on the news, and then that's a really bearish pattern it put in. I'm taking profits, but long term from COVID. But if I'm up like 600 or whatever percent, right, then I don't mind holding that as some of a longer term position.
That's a great trade you made. Well, we have earnings. Snap has earnings on what, the third, right? Or the third or fourth. It's like 3 Fridays from now, and so they've it can go either way. I don't think it's going to lose that 35 gap up that we had from 2 Octobers ago post COVID. But as far as like swinging it back up to 50 or maybe even 60 from 30, yeah, I think it might stay in there for a while. I don't think it's a terrible investment for sure. As far as it being like a screamer to 100 plus, I don't think I could see that.
So with the last earnings, right, they gapped down from 75 to I think $50 in 2 days. And if the numbers are anywhere close to that, you might even see a similar sell-off. So I think it even gives up 30 if that happens. But you're right, it can go either way. All depends on the guidance and do they meet the numbers or not.
Yeah, I mean, I think it could go even lower here. The 61.8% retracement is 35.21, and then you have the weekly 200 SMA around 30. So if I'm going to get longer on Snap, that's a bit, it's a different conversation, right? But Twitter, I like Twitter here based off of my technical analysis. 61.8% retracement, and if we can put a divergence on the RSI and the weekly here, I'd be happy to enter a position in Twitter. Maybe I'll even enter a position today. And I mean, it is the problem with the Twitter right now. The RSI on the daily has gotten really oversold, but I'd be watching this level very closely on Twitter. I think it's a very important level.
I think Twitter is a better play than Snap. I think Twitter looks great at 40. I mean, even with Spaces becoming a popular thing, it's stealing away. It's going to steal away from things like YouTube and Twitch and other places where people get together and have podcasts and things. I think the advent of Spaces, I think, is a good thing longer term for Twitter. And even if they build off of that and do any kind of possible potential future screen sharing, not only just voice but also video, I think there's a lot of play coming in the future for Twitter's potential, because Twitter is kind of like the business hub for all social media. And, we're all here instead of on YouTube talking. So I think that, there's only room to the upside there. As far as Snapchat goes, I think Twitter is probably the stronger of the two plays for sure.
Yeah, and I also think that something that's interesting, that I've been noticing, which is, I mean, it's kind of funny, right? But a lot of women have been reaching out to me on Twitter and talking to me, and maybe it's because you see my profile and they see what I do. But it's something that Facebook did, or Meta, whatever they're called now, right? And they have a dating part of what they do, and I actually think that would really be really good for Twitter, because they kind of have all this information, your demographic information and other stuff, and people are connecting with you, right? And you show similar interests. They could create a dating app around that. I mean, I think there's the potential there, but I don't know, if I know it sounds kind of
honestly,
I think
there's
there's
a couple things.
synergy there.
We are having two different discussions here. First of all, on the technical is really short term for Twitter, and then the long term thesis. I would say for the long term, for me, really, there is an extreme amount of potential there. But that it's been the same story for a while, and I do own a decent bit of Twitter stock, and I've been kind of sitting and waiting for them to really kind of step up on that potential, and then starting to place in better and more right features, but have not really full on followed through with them yet. So my patience is wearing thin with that long term hold for me. But we'll see in the short term. Obviously, the stock is down a lot. No one wants to go out and buy falling knives, but it does feel like we're closer to the bottom than the top on that name. And one thing I will say, a Twitter dating service, Twitter has a lot of really, really great things and features on it, but there's also a lot of really, really toxic people on it. I do not think Twitter is the spot for a dating app.
Yeah, this guy Gav. Oh my God, he's so toxic, terrible.
Well,
the worst.
Yeah, I hate that Gav guy. I want to punch him.
Oh my God!
Whoa. This is being recorded.
Miguel, are you sure the ladies aren't messaging you because of your Ron Burgundy profile picture you got there, leaning your chin on your wrist like that?
Well,
that's too sexy for Twitter, bro. I mean, come on.
But no, I mean, look, you're connecting with people. I mean, some people are toxic. Yeah, I reached out to some people and I said, hey, let's meet up. I'll talk stocks. It was one woman. She was totally taken aback by it, and she started lambasting me and gaslighting me on Twitter. And you get those people, but I think generally, I mean, what I think they should institute on Twitter really, and they're not really doing a great job of it, is they should just make everyone. Right, you should go by your number and make everyone, the check mark, whatever, verified. You should verify people on ID or something like that, sort of what you do with crypto. And so if they're going to integrate that into their platform, right, and they've already started to do that with Bitcoin, and they really need to go the way of Web3, and because Web3 is really challenging a lot of the social media plays right now. If you don't, you're going to be able to own your own data. So what is Twitter doing to make it so that you can own your own data, right? And once you have the ability to do that, right? Because look, my ideas are not worthless, right? Neither is anyone's on this call, right? That's why we're all gathered here, to listen to each other, that we have ideas. So if I have ideas that make money and they're helping people out, right? I should be paid for those ideas just like anyone else. So, and that's my data, right? So they can incorporate that somehow into their platform. And I think there's a lot of things that they probably could be doing better. I'm sure, there's a lot of, with any company, there's politics and infighting. And, with Jack leaving, it was sort of difficult because I liked, the position he was taking. And, to be honest, I'm sure that the stock has been factoring in that Jack has been leaving, because people know that he was leaving. right? And I thought that he was kind of bold, and he was doing some really good things, and he was really big into crypto, and I think that they just need someone that will take it a step further and integrate with the Web3 and what they're doing.
Awesome. Yep. I think that kind of covers it for Twitter and for Snapchat. TSDR, I saw you came up. I want to just throw it over to you as to what you've been looking at today.
Hey, what's up? Nothing. This is my first red day trading for 2021. Down a little bit less than $600. Couldn't get much of a read on the market this morning. I talked about how the Qs were down 8 out of the past 9 days, and today with such a gap down in the market, I was apprehensive to short stuff into the hole, when in reality that would have been the best move. And so I was late to a few things. I'm pretty dissatisfied with the way I traded today. But it looks like we might get the first test of the 200-day moving average. We haven't touched it, tested it since the beginning of this run, nearly 100% since the last time we touched the 200-day moving average on the QQQs. Really interesting. This big gap down again is going to make it very difficult for short-term traders. I mean, the market looks weak. It's tough to go short, and there's really no bounces yet in the market. I've got 374 as a level on the QQQ to potentially take a few things long that I'm looking at. Of course, looking at NVIDIA, AMD, Lucid's again having another killer day. I don't have much to say. I should probably be more listening and observing more so than speaking today.
Yeah, all good, man.
But yeah, not to bring the vibe of the room down. I love the Twitter and Snapchat.
Just get the mood, bro.
I know. I feel like I did.
I'm just playing.
Hey, man, I was real doom and gloom this morning, too, so don't worry about it. I think I
Yeah,
started off with
Matt
that.
was like Noah announcing the ark.
Oh, yeah.
Started flooding, yeah, pretty much.
I know. I was on here earlier listening, and I heard right when you said, we might have, a really big down day, capitulation type day, and I was like, that's messing with my head. I need to turn this off and just focus. And in reality, if I would have stayed and listened and executed based on that, I would have taken some short plays, and I would have been up significantly. I mean, there was a nice level at 10 a.m. on the Qs that broke when we broke lows. Could have taken a phenomenal trade there at 10 a.m. That candle and pretty much all across the board, about 15, 20 minutes into the market, gave some good opportunities. But I let my mentality and my bias get the best of me today, which I promised myself not to do. Anyways, that's okay. It's only day 6. Looks like we are getting a little holding of the VWAP on the Qs right now. Interesting. Like I said, I'm watching 374 to 373.80, probably more precisely, the highs of the bounce this afternoon, to maybe take a few things long. I probably won't. I might just go to the bouncy house with my daughter, have some fun.
Yeah, that could definitely be the move. Nothing wrong with taking a day off.
Yeah, I heard you mention Lucid. What do you think about Lucid right now? I'm going into the lockup in 10 days.
I'm not touching it long. The 50-day moving average is proving today to be a big level again. It's right where we got stuffed, sitting at about 43.25-ish. If we end up breaking the highs of Friday, will be really interesting. I don't necessarily see it happening, but I mean, it's incredibly strong right now. But it's not that much volume. I mean, if you go back to December and November, the volume that we saw in the run up there, the past 2-3 days of the move is not that much volume in comparison to Lucid's past moves. So that has me a little concerning. And again, under the 50-day moving average, pretty risky. I mean, if you were long, from this, 36-ish level, you're sitting really good. That was a good risk reward entry. Buying it on the bounce on Thursday, putting stop maybe below the lows of Thursday, but up here, putting on a position, that's ballsy, especially with the lockup coming. If we do end up getting a pretty volatile push over the 50-day moving average, closer up to 45, that's probably when I'll start to put on a position. I'm still not 100% convinced. I do think the Saudis will sell a decent amount of their shares, but I'm not convinced that it's going to be a SPAC lockup type event. I think it'll be over the course of a decent amount of time, and the stock could absorb it based on how much volume it does. I know you were doing some math this weekend, but I mean, if they sell 100, let's say 100 million shares, over the course of a month, like 5 million a day or so, they'd easily be able to hide that into the market without oversupplying it too much, in my opinion. So I'm really not convinced of either side yet. But if we do see a parabolic type move up towards 45 or even up to 50, I'll probably start to put on a little bit of a short position.
I'll chime in here. I honestly, 42.5 was a key break point to go up to that 45 level. And I agree with everything you said. It's low volume. The mechanism is hedging. I mean, that's what we see on these monthly options. That key pivot today. Actually, when you guys brought up Lucid, somebody had messaged me in my group, and Lucid was telling me that they were looking at it, and I was actually looking at it coincidentally at the same time. It actually looks really good here. At least I know, and it's risky, like you said. I agree with that. And that is a key level to watch. 42.5 holding, at least for the next couple of days, would be that sign to that 45. And like you, the safer, more confident setup is 45. There's support up to 50 from that, so that you could get that parabolic move. It's very likely, and it would be more like a gamma squeeze, more so. And I believe you're right. I think that the selling Saudis will be easily hitting the market. It won't affect it at all. It'll obviously if it moves parabolically, you'll see enough squeezing the covering. There'll be enough buyers to capture all that selling. So absolutely.
Okay, so I did want to do some of that analysis, but we kind of ran long. We're almost at 3 hours on here, and poor Evan and I have to get some food in us before we, pop back onto Spaces for the rest of the day. So we are going to move into some wrap-ups, and I do have a lot of those names. And just so everyone knows, we do a bunch of Spaces where we analyze, different names and technical analysis. If you're one of the people that dropped it in today, I'll try to get it tomorrow. Every Tuesday at 12 p.m. EST, I will be doing a weekly technical analysis space with Brian Shannon, who unfortunately won't be on this week, but will be on in future weeks, Jake from TrendSpider, Ben from Pattern Profits, and Danny Nas. So you can come on that one. You can throw out names. But for now, we're going to go into some wrap-up and final comments. Greg, you want to go first?
Yeah, so let's talk about Lucid, right? So just as we were talking about that, right at 12, I posted a big thread and then did the math and how much of the equity the Saudis will dump. So the number I came out was 175 million shares. So how did I get this number? So right now they own 1 billion shares and they have a 61% control of the company. And I think they do take profit, right? If you look at the other investments, so right now 60% of the portfolio is in Lucid, the US one. And the next biggest position is 7%, 6% of the count. So this is a very, very large position for these guys, right? And these guys put in $1 billion, and right now they're sitting at almost 30 billion. This is a no-brainer, right? These guys will take profit as soon as they can and invest the money in other companies. But with this, they also want to keep a healthy relationship with Lucid, and I do think they control majority of the company. So number we get is, let's say they end up keeping 51% of the company. With that, they have to dump 175 million shares. And usually big funds, right, all of the hedge funds, all of the insiders, they tend to not be more than 10% of the daily volume. And if you use the rule of 10%, this will take them over a month. But the good thing about this is they own more than 10% right of the company, and we will know when they start selling in the first 48 hours. So with this, the lockup is in exactly 9 days. That should be on the 19th of January. We had a similar one back in September, the first day. To the pre-market of that day, the stock dumped 30%. And the 2 weeks leading up to that the stock was down 50%. So it wouldn't make sense, right? And for Lucid, they have, I think, 1.6 billion shares, and 1.2 billion shares go live that day. So the float basically goes up by 500% in one day. Like, it makes no sense for anyone to be long that name through the lockup, right? And if you're bullish on Lucid, just buy it back after lockup, right? After a month. So there's almost a 9 out of 10% chance Lucid goes down to 20-25% leading up to that, right? And another way to play that is load the puts or go short right now, play the momentum and buy it back right before it goes live, right? Because I think right before that, this will be very, very crowded. Like for now, almost no one knows about the lockup, but when that actually comes up in a week, in 10 days, everyone will be aware, right? They will start hedging. And the premiums would be insane by that. Even now, it's very, very hard to go short Lucid. The borrow rate is spiking up. The best trade, I think, is to go short the lead up, play the momentum, and dump and cover your position right before the big move actually happens. So that would be the 18th of January, just the day before that happens.
Got you. Anything else you want to add?
So for now, I don't have a position in this so far, but I do plan to take a big position in a week. So just a disclaimer for anyone listening or who wants to participate in this.
Okay. Definitely let us know when you do. Okay. Keeping it rolling. We'll just keep these each to just a couple of minutes if possible. Matt, any final comments?
Yeah, I'll give a quick, maybe 2-minute spiel on the greater macro. Hold on, dog is barking. Let me shut the door. So, you know, if we look at, I have a tweet I made. I don't think it's pinned anymore, but it was about how we kind of experienced something similar in 2016. Now, rate hikes are always something that spark the market and stimulate selling, right? Fed is passing liquidity on to us, creating sellers. But, you know, we watched reports like the Commitment of Traders show that even at the end of last year, asset managers were going net long futures. They almost went up 20% higher, even buying at the highs. And this is after all the tax selling. So there are buyers, right? There are people looking to buy. People just know they wait for these kind of rumors to play out. And if you look in the 2016 series of rate hikes that we did have, what happened at that point was that very first rumor or those first minutes that created that we're going to potentially have all these rate hikes was just a cycle down. You know, 4,400 SPY probably would be that cycle down. And then the market rallied for another year. And then every time we got the rate hike, it would just be like a 1 to like 2 week at most sell off, and then we continue to rally. The reasoning for that is because of inflation. The type of inflation we have right now is not due to economic abundance, which is typical inflation. The Fed will use interest rates to try to destimulate lending to control. This type of inflation is created by scarcity of things. The lack of supply around the world is causing prices to go up. The Fed has no handle to control that. The only way that fixes is people go back to work and the shelves get stocked back with things and competition brings prices lower, which will deflate that will create deflation. So in reality, the Fed can't really do much to change inflation. It's always going to be a problem. The improving labor market is always going to be bullish for the economy in general, long term. The bond markets, you look at the TLT getting hammered, and all the Treasury notes are just that the yields are really, really high, but that's because of inflation. You don't want fixed income returns when the value of the dollar is shrinking, right? you're losing on that long-term fixed income. So that trade is not going to be very popular for a while, and people are going to need something to put money back into. Equities is probably one of the only havens for that, which is why even with rate hikes, it still takes a long time for the market to turn bearish. So, while it's doom and gloom this week, and I woke up this morning thinking doom and gloom, I really think that for the next 1 to 2 weeks, we're going to spend some time basing out, but I'm very confident that earnings are going to shock people first quarter, and I think that the market in general, the indices and most all sectors are probably going to start screaming bullish as early as the end of January, probably February, and we're going to keep going to all-time highs, and probably, I know this is a little stretch, but maybe by the next 2 or 3 years, probably 5,000 or 6,000 in the S&P. I'm that bullish. So if labor market improves, the economy is getting better, and even with rate hikes, it's still not that high of a rate. So I mean, it's still okay, I think, in my book. We just came out of recession in 2020. I don't think we're going back into one for a very long time.
Awesome, thank you, Matt. Yeah, hopefully agree with you at the end there. That would be great if we can kind of get through some of this muck and see where we end up going. Okay, Miguel, any final closing comments?
I mean, some of the things I talked about, like Tesla went green intraday, which was kind of interesting. So kind of a good little trade there. We went back to the gap, right, which is generally resistance. But I'd be watching that for a trade here, maybe back to as high as 1044 or 1086. Just being disciplined and looking at those levels is always important. And I've kind of mentioned some of the trades I'm in. I'm short some stuff and taking some profits on some of those shorts. So I was talking about Apple, and and again, I like some crypto here. So, and like you said, we got to bounce some Bitcoin already. So I think these are important levels.
Yeah, hopefully this bounce in Bitcoin can hold up. I'm always a bit skeptic, but we'll see where it goes. Okay, Evan, bringing it to you for any closing thoughts.
Yeah, no, Wolf, Good Morning FinTwit is definitely one of my favorite spaces that we get to do. I wish you were able to have the Gov account up here. We need a second iPhone for this man. But make sure you're following Wolf Financial. They're always putting on these amazing spaces. Make sure you're following the speakers up here. Bullish Rippers, the Green Raccoon is an account that I personally tweet from. We have another Spaces going live today with Gov hosting from that account. That will be really fun. Gavin will be on there. We just talked with him exclusive. Catherine would normally be on it. Stock Talk Weekly. We got a bunch of more cool people on. We're going to be going live at 3:30 p.m. EST. Make sure you're following TSDR and Matt as well. Big fans of them and their accounts. Shout out to Miguel for coming up here and joining us for the first time. Happy to hear your thoughts. And I would love to kind of end it, Gav, take the end of my section and do a little bit of a Google Calendar shout out, the second one.
Yeah, absolutely. We got over a dozen people joined already today. I forgot to say this earlier, but if you are DMing me, which you should be DMing me right now to be on the Google Calendar if you're not already on it, you're not alone. Over 2,000 investors are now using this Google Calendar on a daily basis to find our spaces. Again, we know you have busy lives. We understand that many people live off their calendars nowadays. They have side hustles, they have families, they have so much going on, but you still want to make spaces. That's why you're here and you joined us. We had hundreds, if not thousands of people come through this space today. And how do most people find it? Simply by DMing their Gmail to myself or Stock Market News, just asking to be on the Google Calendar. That way, with a one click, you can see when every single space is. You can know who's going to be speaking on it. You can know the topic, and it's your one-stop shop to go and find recordings as well. So once again, if you're not already on it, DM us right now. If you don't like it, you can always unsubscribe for free. Doesn't even send us a message. No harm, no foul. But you're probably going to love it. So go ahead and DM us right now and get on that. Anything you want to add to that, Evan?
Nah, dude, that was perfect. Make sure you guys are getting on that list. One of the best things that we've created.
Very cool. Okay. We will be back on Spaces, like Evan said, at 3:30 p.m. EST. I will be on the Bullish Rippers account hosting from there. I think I'm going to have one of my interns come in on the Wolf account, so we have that in there as well, because unfortunately, I do not have two iPhones, although I have three phones at the moment. Two of them are Android, and Androids do not like to work with Spaces. It will kick you out ASAP. With that being said, we ran 3 hours today. If you didn't already follow our speakers, please follow our speakers. They took hours and hours out of their day. Miguel's right. A lot of people that do this get paid. Majority of the people that we bring up on here have paid Discords, and they come in here and they share it for free. And all that they really ask for in exchange is that you join their communities, right? Throw them a follow, interact with them, engage. They're all very active. I know that I spend like 40, 50 hours a week on Twitter, putting in the time, trying to interact with people, host a lot of spaces, get a lot of tweets out, and give analysis whenever possible. So once again, if you like spaces, follow the Wolf Account, follow Stock Market News, and we will make it worth your while. That's it for today. I'm going to go make some food, and I will see y'all in a few hours. Take care, everybody.
Thanks, Gav. Take care. Appreciate it.
Thanks, guys.